Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever.
Good morning, everybody. Got some stuff to talk about this morning. Happy Father's Day. Can't see my daughter today, unfortunately. But, you know. Alright, so today, some of the topics we're going to talk about. I think I'm going to start doing this at the beginning, just kind of letting everybody know what we're going to talk about, what's to be expected. There's a lot of students that come and they don't really know what it is that we're doing here. So let's just make it kind of clear, right? A lot of you guys that do join regularly, you kind of know how things go. So my sound's too low. How about now? Is that better? What the hell's happening? How about that? Is that better? Why is it? Yeah, let me know if y'all could hear me okay. Appreciate you letting me know, Alex. Not too sure why it's so low. It won't go up now. But yeah, if y'all could let me know. Can y'all hear me okay? I don't know why it's so low. It's so weird. I see it on my end. I turned the thing all the way up. It still looks like it's kind of low. But yeah, let me know. Turn it up some, please. You sound too low. Is it okay now? Damn, I wonder why it's so low. Just turned it all the way up too. Let me unplug it real quick and then I'll plug it back in. Alright, can y'all hear me now? A little bit better? Shit, it looks the same. Damn it. Alright, yeah, let me know if y'all can hear me okay. I just unplugged it and plugged it back in. Not too sure why. Yeah, it's very strange. Very strange. Damn it. It sounded good earlier when I was testing it. I'm not too sure why now all of a sudden. But yeah, just let me know in the chat real quick if y'all can hear me better now. Just unplugged it, plugged it back in. And then of course we're gonna get started. Wait, just give me like a 1 in the chat. It's better now? Okay, cool. Yeah, I don't know what the hell, what? I tested all this before I hopped on all of a sudden. But yeah, so for those that don't know what we do here, pretty much the way that these Sunday calls go, we start obviously from higher time frame. We do analysis on the news. We figure out what's going to happen to get a reasonable assumption for the landscape we're going to be involved in. After we do that, sometimes we'll look at seasonality, sometimes we'll look at COT. Generally that happens midway through the month, which we're at right now. And then also we talk about sometimes, like I said, the COT, seasonality. Then we go from the bonds and yields, which have an impact on what the DXY is going to do, what the foreign currencies are going to do, like GU and EU, and what the indices are going to do, right? So DXY, currencies, and the indices. But once we finish with the bonds and yields, we move specifically to the currencies, the foreign currencies. Then we go to the DXY. Then finally we get to the indices, because with this background information, we then can make a justifiable decision with a lot of things basically supporting whatever it is that we're trying to identify, versus what everybody else does, which is they just jump to the indices. And those of you that have been here for a while, I mean, it's been pretty spectacular how accurate we've been, how unfazed we are by retracements, how reliable our bias and narrative is. Narrative is different than bias, for those that maybe don't know. Also, I classify narrative as what the higher time frame is doing, like what is it reaching for overall, and then the bias, if like say we're bullish, right? Say the narrative is bullish, like say this was going to go higher. Well, if the narrative is bullish, there could still be downside retracements. So in that case, the bias would be different. And because we have it separated, it kind of helps us, kind of navigate on a day-to-day basis. And those of you that have been here for a while, you've seen just how spectacular and consistent we are in terms of identifying where price is going to go, why it should go there, what would invalidate that. And then you guys have also seen on full display our ability to stick to a bias while still navigating the different narratives that come into play against whatever narrative it is that we're operating within. Okay, so yeah, let's begin with that out the way. Hopefully that makes sense as far as what you can expect. Yeah, like Chowazi said, he's been here for a while. The streak continues. It's the market cannot escape the fate that we have placed on it. And so Sunday today, we don't have any news. Obviously, we don't trade Sundays, if you take my advice. We think of things from the start in terms of power of three, every single week, every day, so on and so forth. Power of three is on every time frame. It's on the 1 hour, it's on the 4 hour. Obviously, all of that works within the higher time frame, but every time we start a week, every time we start a day, we got to be on the news, looking at what's going to take place, what can be expected, and then try to get a feel for when the expansion within a Tuesday or Wednesday, when that should take place in terms of the day. Generally, that can be anticipated by looking at what news events are happening on what day, and then also kind of figuring out what the start of the week is going to do. So sometimes you want to let the start of the week print first. So like, for example, if you guys are starting the week and we don't really have an understanding of where it should go, or like a reasonable argument in terms of one way or another. In that case, or if there's no news, generally you're going to want to also wait and consider low probability conditions. And then up until the news event that takes place, you're going to want to identify power 3 elements from the start of the week up until whatever news event. Like in this case, let's just say the unemployment claims and core retail sales, right? If Sunday has no news, Monday doesn't really have any news, generally it's going to be consolidation and manipulation given the weekly power 3 dynamics that take place. Okay, so yeah, with that being said, keep that in mind as we go through today. Keep that in mind every single week, right? Power 3 is a pillar in my trading. It's a pillar in most accurate ICT traders like Jade Cap and so on and so forth. If you look at what certain people talk about and then you like come here, you see that a lot of the people that are successful in ICT trading have a lot of similarities. We may have different models, but a lot of the groundwork, like the basis of how we get our ideas, a lot of it overlaps. You know what I mean? Success leaves clues, and there's certain non-negotiables, like power 3 is a non-negotiable thing that we have to really pay attention to and constantly be operating within and constantly be paying attention to, right? Like I said, okay, open prices, power 3, the certain liquidity pools that I give you guys, which I'll mention later. So you guys can mark that off if you haven't already, if you're new. So yeah, all the stuff that we do today on Sundays is generally non-negotiable. Okay, this is the basis as far as what you guys have been seeing, right? If you've been watching me be accurate, call the market day to day in my private community. We do it on a daily basis. I share certain ideas in the free community, but then I'm also here on YouTube every single week, basically setting you up for the week, right? And some students that have been paying really close attention that don't like to be day traders or don't feel that they can be day traders have now discovered that I've been giving off a model for a swing trader or for like a short-term trader that wants to just trade the weekly range and doesn't want to use the seconds chart. The process that I do, although it is on the higher time frame and I trade on the lower time frame, it's setting you up for any scenario. Basically putting you in front of how to call the market, what direction it's going to go and why. And then, of course, the navigation and all the intricacies as well are on full display too. Okay, so the diligent student that has been watching me for a while, which all of you guys that are on the call are part of that group, you guys have been seeing some fantastic analysis. It's not rocket science. I don't make it overly complicated. I give you guys each element that I talk about step by step. I answer obviously questions and stuff, which sometimes pulls us in different directions. But nonetheless, the overall process in itself, I hope has been fairly easy to follow along with. And hopefully this little list that I just mentioned earlier, right? We start at the news, we do our higher time frame analysis process, we go to bonds, yields, currencies, DXY, then we get to the indices. And then, obviously we talk about key liquidity levels. We talk about, seasonality sometimes, COT sometimes, which we're going to talk about in this call today because we're approaching the quarterly adjustment or the change from one contract month to the next or one quarter to the next, which I'm going to show you guys before we move on past this news. I'm going to show you guys how to identify that and what you need to be focusing on. Okay. But yeah, I hope the overview makes sense here as far as what we're going to cover. And I'm proud of each and every one of you guys that have been having a lot of progress, been sharing your journey with me. I'm gratefully appreciative of that. And, because I like seeing if this stuff works, how many people this works for, if it works for other people, right? Because it works for me and I put it on full display, and I don't want you guys just to be here to think, like, let's just watch what he does, right? I want you to be able to think deep down that it's usable for you. That's why I do these calls. I don't just do them to just prance around and, brag about anything. I'm not a flamboyant person, which you guys have, known if you've been here for a while. But this stuff is, it's life-changing. And it changes your perspective with these conversations. Or just simply having conversations with people that are where you want to be or are a little bit further along that prove that they can be consistent. And again, success leaves clues, and proximity is very important for success as well. In any industry, if you're close to success, you can emulate it, and then over time, those skill sets will bleed onto you. And then if you just listen, allow yourself to be teachable, you would be very surprised at how overcomplicated you personally have made this. I know that's how I felt. Until I started really just trying to dissect the important elements, hearing people talk about the important elements, which again is what we focus on here on Sundays. And it just, eventually it just becomes part of you. But you got to stick around long enough in order for that to manifest. I mean, in trading as a whole, you know what I mean? Let alone being locked in with a community like this. Okay, so let me see some of the comments real quick. Long gold, oil, short, NQ. So I think that oil is actually going to go up. I think gold's going to also go up. Maybe we can incorporate that today as well. I do glance at those because they are part of the risk on, risk off, which is what the higher time frame analysis is. It's pretty much what classifies the overall market analysis when it comes to all the assets we look at. That's a risk on, risk off process. Okay, it's an overall analysis on the whole entire market, given the fact that everything is connected. Okay, so yeah, what the war that has taken place is going to definitely be something interesting in terms of how it's going to affect things, because that is like the oil hub, where all this is taking place. So like natural gas and oil, this is a beautiful example of, as far as why countries should be independent, though. They shouldn't be too dependent on massive resources from people that may hate them. It's things could get hectic, especially with a volatile environment like it is in the Middle East. Of course, we don't want to wish war on anybody or anything like that. But as a trader, there's a dark side to things in terms of opportunities that are presented when it comes to circumstances like this, or chaos that happens in the world. That means there's volatility. For a trader, it's an amazing thing, because then we get this a massive amount of delivery and just manipulation and volatility to the point where we have just unlimited amounts of opportunities. But your experience is going to be tested. Whether you're organized is going to be tested. Whether you know what you're looking for and what you're doing is going to be tested in times like this. Okay, that's why ICT and most mentors that are actually decent, that's why a lot of them say just to wait, chill, just watch, study, don't do too much. And so be aware. Don't be scared of conditions like this. You want to anticipate stuff like this, like crazy stuff happening, because something's going to happen always. It's human nature. But again, as long as you know what you're doing, as long as you follow the process, which is obviously what we do here. I try to get you guys ready for process-oriented decision making. But yeah, you're going to be really tested if you've been trying to engage a whole lot. And I've gotten a lot of messages saying things are difficult and all this stuff, and I understand. But again, try to figure out the process, because once you realize process and stick to what we're talking about, those of you like Tony, like Fritz, like Chawezi, who's recently became part of the family, they understand and they see what's going on, and it's blatantly obvious that the process we employ is extremely accurate, and you can do it too. Again, I'm not overly complex. I'm a very simple person, and I had to simplify it for myself, and I hope I've been doing a good job simplifying it for you guys too, steering you in the right direction, mindset-wise plus process-wise. Okay, so Alex said, I had a mentor like you before talking about seasonality, risk on, risk off, yeah. So it's literally not needed. Okay, if that's how you feel, that's totally fine, Alex. But me personally, as a mentor and a person that's rooted in long-term analysis, that day trades and keeps a higher time frame perspective, who analyzes quarterly trends, yearly trends, like which we were able to get in front of this year, and seasonality and COT also had a role. Price declined aggressively down to a yearly order block, and the bullishness was also supported by seasonality and COT analysis that I employ. So again, that may be something that you think that it may not be needed for you. That's totally fine. Like I always say, you take some of the stuff that I talk about and use what you will use. You're not going to use everything that I use, and that's fine. But just keep in mind, understanding those types of pieces to the puzzle are very important if you're trying to be rooted in an analysis that takes you well beyond a month, especially beyond a day or two. Okay, so that is the importance. It's not a be-all, end-all. If there's any mentors on the internet that try to claim it is, they are stupid asses and don't know what the hell they're talking about, and they're trying to differentiate themselves to sell you a course. And I can understand, if that's something you've dealt with is obviously, it's going to put a bad taste in your mouth about certain things. COT and seasonality were not even accurate this year, but because of Trump. Okay, yeah, well, we have a resource that ICT mentioned called, the guy's name is Steve, and he has this MRCI analysis thing for a bunch of different fundamentals. And it may not be fully accurate in terms of like certain charts, but he does a daily, monthly, yearly, quarterly analysis that has real-time analysis in terms of seasonality influences. And it gets real deep rather than just the charts that are showed. There's actual ways to make it pretty helpful. It's not a be-all, end-all. I don't make my buy or sell decisions off of what seasonality tells me. So there's not too much weight put on it. It's just a further confirmation. Everything else aside from seasonality and COT that I do or employ or teach are obviously going to have more impact when it comes to day trading. But again, the seasonality and COT perspective has to do with a long-term analysis as far as what price is going to do for the next couple months and weeks. And I mean, we could say and think what we want, but at the same time, the whole year being accurate doesn't just come from one chart or one or two tools. It's come from multiple tools, including COT and seasonality. And even when things are not correlating with the seasonality, if it's not showing, even that tells you something. And that's something that I talk about in my private community. And, they see how important it is. Yeah, but bro, your problem... But you're probably looking to take 1 to 2 R trades or something. Very few executions. COT because of Trump, the thing accurate enough, so why use it? It's kind of my point. Yeah, I mean, Alex, that makes sense. I mean, there's justifiable arguments for that. And again, that may be how you see things, and that's fine. I'm not going to argue with your own opinion. I'm not here to convince. And I'm not here to persuade. I'm just here to share my opinion, and what works for you, right? And if that's, if you don't want to use COT and seasonality, I've never claimed that it's something that you have to do. It's not even something that I look at on a daily or weekly basis. It's something that I refer to at the start of a month, start of a quarter, starts of the year, so on and so forth, just to get a little view. And when it doesn't work, I've mentioned also explicitly over the last year, it's not something that you pay too much attention to. You put certain tools aside, like overall, we do bonds and yields analysis, right? And sometimes they're not correlated, right? Like this year, it's been, pretty heavily cracked in correlation. So with that being said, we just, get an analysis on that, see what the vibe is there, continue to do the analysis, and when it kicks in line, so be it. But when everything is in line, that's the highest of probabilities. That includes seasonality, COT. Again, it's not a be-all, end-all. Okay, it's just a piece of the puzzle, and sometimes it has to be put to the side. Just like how a construction worker, right? They're not always going to use a hammer. Sometimes it's going to be, they're going to be using more of like a drill or something, right? But they're not going to just disregard the hammer just because it's not being used in that certain circumstance. They're going to still have it in their arsenal, right? So essentially, the way that I teach COT and seasonality, or just the reason I even mention it, it should be looked at from that lens. Like same with the PD arrays. Just because we don't use maybe breakers or optimal trade entry or whatever else in a particular moment, that doesn't mean that it's, for one, not effective, and it doesn't mean also that just because it's not there that we're not going to refer to it still moving forward. These are just all tools in the toolbox, and again, you're going to use what you're going to use, right? But they do absolutely work. I've proven it for the last 3.5 years. Sometimes it works more often than others. Certain circumstances, obviously, with all this stuff taking place, it's going to skew a lot of information, especially with the data-driven information like seasonality and whatnot. But yeah. Okay. He says, sure, I'm just saying it's way overcomplicated. I generally feel bad for the people that sit there and wait a week or more and take their trades that are waiting for. Yeah. I feel bad for people that try to take 15 to 20 confluences as well. Again, a lot of the stuff is supporting ideas. In my private community, I'm taking trades on a daily basis. I'm pointing out multiple opportunities. So referring to the comment earlier saying that we take very few executions, I take very few executions based on my risk protocols. I point out so many trades per week, per day. So I trade daily. I have a private community as well. I don't just hop on YouTube. I have a private community I've been running for 3.5 years. So we're doing so much more work that's not seen on the surface, aside from what's shown here on YouTube. Not that there's elements that are held back, but in terms of velocity, as far as how much we trade, and some certain advanced topics that I don't talk about on YouTube. Obviously, there's things that are aside from YouTube because a lot of times people don't appreciate what's on YouTube. They're quick to criticize. They're very quick to try to inject their opinion, and they try to come here and learn. But then again, there's a lot of nonsense. I used to teach for free for a whole year, and I just got sick of it. But again, I have so many good people on YouTube that I wanted to teach, including yourself. This is in no way a criticism to you, but it's just kind of giving you like what's in my mind and just how things are ran here. And some things are obviously not seen. You know what I mean? See Fritz right there. He's not even in my private community. He's in my free Discord, and he even sees. You know what I mean? And so even aside from the free elements that I have, there's other layers and levels that you can take this. And of course, I don't want to just spew a bunch of advanced stuff at people because a lot of times traders with less than a year or two of experience come to me and the basis of the frameworks and how to, and how to like get your footing and become effective or start working towards the right things. That's more of what I focus on YouTube. I focus on a lot of like framework. I focus on bias and narrative heavily. There's a lot of stuff that I'm not holding back when it comes to bias and narrative on YouTube, especially because that's like the main question I get, and if I can get you guys to see that it's accurate and what you can use, because think about it, there's for my daily bias and narrative and just overall process related to that. Again, it has less than 10 steps, right? Or 10 things to identify or utilize, not all at once, right? Not every element is used all at once. But most of the time, it's identifying the fundamentals, identifying the higher time frame, learning about invalidation, validation, continuation variations from both the higher time frame ideas to the lower time frame ideas, how to use time frames together, how to incorporate all the different assets using risk on, risk off, and then there's a couple other elements obviously as well, which I'm not going to get fully into right now, but because we've got a lot to talk about today. But yeah, it's very simplified here. And Alex, I'm sure that you've seen a lot of people overcomplicate, and it's completely ridiculous. And that's part of the reason why I also started doing YouTube even more consistent, because I just see a lot of idiots on social media trying to rename things, trying to overcomplicate things, and seasonality is one of those things, and COT is one of those things that they try to use to seem smart. Right? And they try to overcomplicate the process. But even analyzing those things, I have very simple rules, which I've talked about before, a very simple process to apply it to, or to apply it to the charts, when it's useful and when it's not useful, and just how to use it to allow yourself to gain bias and narrative. I in no way have ever said anything about commitment of traders and seasonality being a reason for me to take an entry, or any of you guys to take an entry, right? It is not the case at all. And if anyone says that on social media, that they have to have seasonality or COT in line to take an execution if they're a day trader, you need to just block them, because they are idiots. Okay, and they're making things seem like they are not useful, steering people away from good tools that are useful in certain circumstances when the rules apply. Okay. So yeah, there's a lot of stuff that goes into this other than, some stuff that may have put a bad taste in your mouth, like COT and seasonality. I've seen some of the people that do like overcomplicate this to sound smart. And again, that's why I come on here and I rarely talk about it, seasonality and COT and certain elements, because they're not always applicable. Just like how every single PD array, every single model, every single ICT concept is not applicable at every moment in trading on a daily basis. There's certain elements, certain critical key elements, which obviously I point out for bias and narrative on Sundays. And then there's also certain elements for trading on the lower time frames and finding setups related to that scenario. Okay, there's different layers to this onion, and not every layer is going to be used in every other layer. And that's one of the things that I try to make sure I clarify for everybody. And in terms of seasonality and COT, I've made that very clear over the last couple of years. So Alex, again, this is in no way like anything that I've said is in no way in a shade towards you. It is something that frustrates me with the people that overcomplicate crap. But that, again, that's kind of why I'm here as well, to try to get people to realize that it's not as complicated as they try to make it seem. That you can make this as easy as you want, but you can also take it down to deeper layers. But even the deeper layers can be simplified, which is again something that I pride myself in. That's fine. Okay, good, Alex. Because I in no way was trying to throw any shade. I get really passionate about this type of thing. It's why I started teaching in the first place. I never intended on teaching the concepts because trading does more than enough for me. But I got so many requests from my students I was teaching for free to set up a private community because they saw all the nonsense that comes with being on social media and just the distractions and all that. Just the rudeness and the chaos. So I ended up starting a private community, and that private community turned into what it's turned into today. And I have many people. Even my free Discord is something that is pretty spectacular from the results I've seen, just from YouTube, just from things that I share. Like Fritz has been seeing progress. Tony especially has been seeing progress. He's been doing phenomenally. He's been here from the start when I started doing lives consistently this year, aside from my private community. Chawezi has seen it as well. But and hopefully you'll be able to continue to spend time here, and also, again, find things that work with you, apply them, disregard the things that you feel won't resonate with you, because that's another good thing about me is I have multiple models that I use. Not at every single moment, obviously. They have different rules. But certain models get presented and certain students will resonate with them. Certain concepts will be presented and certain students will resonate with them. And that's the beauty in trading. You could take what works for you, disregard what doesn't work with you, and you could still be effective. Again, not every concept is going to be used at every moment. Not every concept is going to be workable for some students. And some students are going to be able to use more things than others. Some will want to use less than others. That's the beauty in trading. And again, if you see anyone on YouTube that thinks that seasonality or COT or any of these higher time frame concepts need to be there, or if there's like 20 confirmations they need, again, that's a beautiful red flag and a stop sign telling you that they're full of shit and they need to be completely ignored, and they're just taking up space in the community as far as the trading community as a whole. And they're the type of people that cause people to fail and make this seem like it's impossible. It's not. Okay. And so yeah, I'm glad you didn't take any offense, brother. I want you to keep being vocal about those types of things, so that I can kind of share my perspective on things. Because you talking about the overcomplicated aspect that people try to place on COT and seasonality is going to help students realize when they come to this channel or anybody else that is worth listening to, that it's actually not as complicated. It's not a necessity. Certain things are not needed 100%. Like, you don't have to look at seasonality COT to be successful. I just do it because I am obsessed, and it's just something that I've seen work because I've used it so long. But it's not in any way something I use on a daily basis. So you're kind of big on frauds. So are you showing any proof that you're profitable? Yeah, so the proof of profitability I've shown in my private community. I also show on a daily basis that my bias and narrative and executions are continuously accurate on a daily basis. The amount of money that I make personally and my financial status obviously is nobody else's business. I show 3 times a year me making massive amounts, showing my live account making $10, $20, $30,000. I don't do it on a regular basis because that's not a selling point. I'm not here to, like I said, convince or persuade you in any way. I want students to take the time to watch what it is that I do, see if they can learn from it, which Tony, Fritz, and many others can vouch for, aside from my private community who, got many full-time traders in there from their time with me. So again, my goal is not to persuade. My goal is not to become the biggest YouTuber or act in any way like I'm the most profitable or the best trader. My goal is to show what I know, and over the years it's shown to be able to help others become full-time and part-time and help them with their bills as well. I have no selling point other than my private community, and again, whatever sticking points are there, if I can't justify it, that's why I have a YouTube channel, so you guys can end up seeing for yourself me going live, calling the market tick by tick, candle by candle, presenting no over trading, no over leveraging. My private community's got to see me do a funded account this year, fully profitable, 86% accurate from the dashboard. I've also kind of shown that in the free Discord too, for those that wanted to see that. 86% accurate from March up until June, the start of June. So again, you spend some time here and it becomes blatantly obvious. And if it's a requirement for me to show you my bank account, my broker statement showing you how much money is in my accounts, that's not something I'm willing to do, and I'm not obligated to do that in any way, right? So unfortunately, that does keep people from fully committing, to investing in me as a mentor, and that's totally fine. I'm not here to have the biggest community, the paid community, because that's like not even a chunk of my income at all. I charge such a low amount on purpose because it's not something that I live off of. It's just my trading is what I live off of, and for the most part, right? So again, the goal here is not to give you signals. It's not to sell you a dream. It's to make sure that students can have the opportunity to learn for for free from someone that proves that they know what's going on in terms of bias and narrative, and hopping on the live calls, seeing what I show daily. I mean, you could put 2 and 2 together. You know what I mean? So, and again, if there's certain things that have to do with like, oh, you need to show me your broker statements or show me how much money is in your account, or that's something I'm not interested in. And again, it's not something that I lose sleep over at night, because again, the students that do spend time here, just like with ICT, he spent years trading on a demo account, and people were able to see that, man, this guy's just accurate regularly. So if he wasn't obligated to do it, I shouldn't be obligated to do it. None of you should, I don't see any executions on Discord though. Okay. Well, I don't go live in my Discord all the time. I don't take trades all the time. In my free Discord, most of my executions are live with my private community. So yeah, just so some trading view photo, marking highs and lows. Yeah, so a lot of the times the free stuff, again, is not for a signal, right? It's showing you bias and narrative. Again, I'm live daily with my private community, calling out entries, showing executions. So again, there's a paywall in front of certain things because again, I'm not here to, justify anyone's interest. I do have the execution arrows. I show even on YouTube, in the YouTube realm, I'm also showing the live broker account. I show live execution labels in YouTube live when I take a trade. So again, it's probably because you haven't been here that long. You're kind of just trying to, push out proof for yourself. And I'm going to just tell you, be patient, right? Hop on lives with me. Come and see what we do live, right? And you'll see, right? And again, I don't think you're necessarily, just from what I've seen, looking for a mentor. You're kind of just trying. I'm not really sure what you're looking for, but again, I'm not here to justify for anybody. So you're live on New York Open. Yes, every single week for the last year. And again, I've called bias and narrative on Sundays for the whole entire year, and every single thing that I've called out has worked out. And that's not just me saying it. Fritz has been here from the start. Tony's been here from the start. They're not in my private community either. Who else? Chowezi's been here for just like the last couple months and have seen it. And yeah, you know, again, I let my trading analysis do all the talking. I'm not, again, here to dick measure. Okay. So yeah, no, I'm pretty experienced. Yes, that I kind of figured just from what you've been saying. But of course, if there's something I can use to get 10% better, I'll use it. Yeah, Alex, I'm sure that, you know, if you spend some time here, you'll see that there's well beyond 10% of the things that you'll be able to use to become better. And again, all of it is not going to be used in your trading, especially since you're experienced and I'm assuming know yourself as a trader. Okay. But yeah, what I will have to say is definitely just stick around and just, you know, spend some time listening to some of the things that we talk about. Take tabs on the bias and narrative tactics that I use. Keep tabs on what is being shown on a weekly basis, and, you know, measure out whether it was profitable or not, or whether it could have been a profitable learning experience for you. Because I never guarantee profitability. No mentor can. They're obligated in that case to be a financial advisor, and they can be sued like ICT was. And, you know, I refuse to put myself in the line of fire like that. Unless, of course, they're in my private community and, you know, they agree to the terms of service. Definitely less than 120 days. I learned a lot of fundamentals that made my percentage go up amazingly. Yeah, Tony's passed funded accounts just through his time here as well. I had a student, also, if you go look at my testimonials, I have students that join for like a couple of weeks and they just pass funded accounts and do what they got to do and then they get out. So where do you do these call outs and such? Sometimes it's on YouTube. I don't generally put people in trades. I say, hey, I think price is going to go here. And then I let the students decide what model they're going to use. And then eventually towards the, you know, later in the session or as price is printing, I show the execution that I took, the model that I took. But I'm not here to be a mentor that's going to shove you into a mold. You're not going to be able to use everything that I use. Some stuff is not going to work for you. You know, some people use optimal trade entry and they don't use breakers. Some people do, you know, the other way around. Some people focus on just the YouTube model. So if for any mentor to try to shove you into a mold and say, hey, take this execution, take this, it's doing no traders any type of service. It's just building codependency. And I'm here to teach and have been teaching for the last 3.5 years, independence. I don't want everybody tethered to me. That's another thing that separates me as a mentor to everybody else. I'm not here to turn people into signal junkies. I'm here to build savages or help them become savages on their own. And, you know, I feel it's, you know, it's been doing fairly well given the testimonials I've had. Freddie's new too. Freddie has seen some stuff as well recently. So what do you do? And again, most of the like very hands-on stuff aside from Tuesdays is done in my private community live. I go live 7 days a week, generally 6 because I give myself a Saturdays off. But pretty much every single day we're live if there's something to do or I feel that there's something to learn. You kind of look like ICTs. Tell me why I've gotten stuff like that. I've gotten his cousin. I've gotten his nephew or something. I'm like, dude. Oh my gosh, dude. Like, it's the beanie. It's got to be the beanie. And hopefully it's the skill set that kind of gives that off too. You know what I mean? Like, dude. That was funny, dude. It's not the first time I've gotten that, bro. Oh, man. But yeah, you know, I personally, you know, being live, the whole intention is obviously I could go run ads. I can go make a course and try to shove it down people's throats. I could show my $5, $10, $20, $30,000 days. I do 3 times a year. I've already done it twice. So in September, when I get a big run again, I'll show it again live in my live account because I know there's some people that need that to build trust. But again, I don't want to give the false expectation that just because I'm doing something means they'll do something. And a lot of times those that try to shove shit down people's throats, they have some course they're trying to live off of. They have, you know, this mentality to build codependency. And I just feel like when I was coming up, the first year or two, when I saw people smashing it, it affected me negatively. So that's why for now I'm sticking to focusing on the skill set itself. And then it's been attracting the students that I have wanted to work with. And, as a result, the students that have joined, we've built strong relationships. They've become an asset to the community as a whole as well themselves. And, it's kept out signal junkies. It's kept out people that I don't want to work with, because I don't want to work with everybody. My private community is not for everybody. I've kicked and refunded multiple people because of just their attitude, and I show so much that's so obvious just on a regular basis, just from call outs that I do. Like, it's going to go here and it goes there. Execution labels, my mindset, how to manage the trades. It's been so obvious, other than me showing like, hey, I'm making this amount, which is the least of important, So ICT is asked. Okay, so yeah, I kind of see where the perspective's coming from as well. That's an opinion that people can have. Not everyone has to like ICT. I always tell people that, I have a lot of students that don't like ICT, just his demeanor, the way he behaves. And, that's fine. I don't really agree with a lot of the things that he does as well in terms of behavior, how he carries certain things. But again, it's all marketing. It's to make people talk about him, to build like a disdain, because where there's smoke, there's fire. And then the people that go into his concepts and are able to separate the man from the concepts see very clearly as they study that there's something to this stuff. And then, of course, there's traders like me that show I can call the market on a daily basis in my private community, and then a weekly basis in my free communities. And then also Jade Cap, who's basically broken the records, trading a lot of the same stuff, Power 3 and all these things. And then Trader Kane, who he's a multi-millionaire trader who's been trading ICT concepts for about 10 years. But yeah, Tony, the skill set. But for example, he got cooked on Robinson. So there, you could agree or disagree. The excuses, obviously none of us can actually know. The excuses that he gives are obviously, he has nothing to prove to anybody. And nobody that he wanted to go against joined. So he quit. And the first blowout apparently was because they were trying to put a copy trader on his stuff. So he ended up tanking the account there. Obviously, he's also come out this year saying that he's tainted his image dramatically, especially, escalating that this year and last year, because there's been so many people just trying to rip him off. So he made it so his image is so tainted that, the people that try to go out and rip off his stuff, or, claim that he's their mentor or whatever, he makes it so they can't sell stuff. And if that's what he did, I guess, it's his concepts that he, taught and stuff like that. So, it is what it is. Again, just like I mentioned, if you can separate the man from the trading, which is what I've done, like, I'm not obsessed. I'm grateful for what he's done for the trading community, his community specifically, and, the people that he's converted and whatnot. I'm grateful for the stuff that he's given me and everybody else, because I've used it. I proved that it works, that I have a concept that works for me within his concepts. So he's done a lot of this stuff purposefully, right? He's even came out and said it, both free or on the public domain, and especially in his private community, because there's a lot of scumbags, dude. They go in, they try to steal his stuff. They try to not give him credit. And you can imagine that weighs heavily on someone that spent their life learning this. And from what I understand, created these concepts, or created the language to navigate the concepts. And if you see a bunch of people trying to steal what you've spent your whole life learning, you can imagine the animosity he has tucked down underneath, and he, of course, kind of invites the negativity, okay, because he kind of goes at people too. But again, it's a beautiful marketing tactic, because, if you're too peaceful, if you're not stirring the pot up, it's kind of hard to do marketing. Because everybody wants drama. Drama sells. Being peaceful and focusing on, a peaceful demeanor, not trying to start any problems. You have a slower rise. But if you want a meteoric rise, a lot of times those people that have meteoric rises have a lot of haters, because they may have pissed someone off, went at someone that was a pillar in the industry. And, So, that's kind of how I view things. Like, some of the view that I have on things. Like, I understand that he's done a lot of things that also are kind of questionable from what I've saw. But if I put it in to the context of what he's explained it to be. Like he did everything on purpose to stir the pot, to taint the image so some people can't rip his stuff off and sell stuff and use his name and whatnot. It makes sense, and you're going to either take that and believe it or not, because we all have our own opinions, obviously. But that's just personally from my view. That's how I see it. And I just thought I would share that with you in terms of the Robbins issue and all that. One thing you can also look at, aside from ICT doing what he's done in the Robbins, which basically not succeeding in it, from what he said purposely, there's actually an ICT trader named Inner Circle Morpheus on Twitter. He's actually #1 on the leaderboard in Robbins. There's also another guy named Ken something, who's consistently over the last 6.5 years been in 5th place, trading purely ICT concepts. So again, if you don't take ICT doing it, because he's obviously got his antics to do marketing and he doesn't have anything to prove to anybody. He could care less, from what I've heard, whether people like him or not. But the students, the results the students have, if you could take that as your validation for the concepts, whether they work or not, I think that's the best way to do it. Separate the man from the concepts, because whether you like him or not, like you just said, Alex, they do work. They can work. It just depends if you can spend enough time studying them, figuring out what works for you, getting around people that, maybe are a little less volatile in terms of their perspective, like, this community, and some others that are also really good that aren't here to stir the pot. Maybe you can see that there is a place for you in the ICT family, or just the smart money concepts, if that's what you want to call it, because you don't like ICT, right? It's pretty much interchangeable. It's the same, right? But I do encourage you to spend a lot of time digging into these things. Spend time here. There's not going to be any attacks on anybody. I'm not a drama-filled person. Fritz said having the biggest prop firm payout ever. Yeah. It's insane. From Robbins to all the freaking prop firms having an ICT student on the leaderboards, like within the top 10. It's just incredible. Just simply spending time here watching me call it on a weekly basis, in my private community on a daily basis, 86% accuracy, which I've proven through the screenshot of, the last 3 months, because that's what the screenshot was from the funded account that I shared, the screenshot of it. The last 3 months, 86%. Who can do that in a week, let alone months on end? And then every single Sunday come out, call a specific target, and price goes to it for, at this point, 6 months. It's been 6 straight months since I've called the market up and down, from higher time frame and lower time frame. I think that is more evidence of consistency and validity to a concept or a trader's overall skill set, rather than them showing you a broker statement, which they probably over leveraged on. They could easily over leverage and say, hey, I made this amount. So I hope that's helpful, some helpful stuff in terms of separating ICT and answering some questions about that, and just kind of laying out what it is that we do here, right? So what we talked about from the start, and but these proofs you're talking about, you're not showing to members that are considering joining. Yeah, that's the thing. It does stop some students from joining. And like I've mentioned, I'm not here to blow this community up. I'd love for this community to get bigger just off of the skill set itself. But again, if seeing my finances, like how much I make as a trader, is something that stops traders from joining, then a lot of times those are not the traders I'm trying to work with, unfortunately, right? Because that means they're not focused on the skill set, right? Because I have so much proof that I'm able to call the market, that I have things that can actually absolutely help you, at least at a very bare minimum, become more accurate in calling direction, that the students that have come to me have used that and they've seen the results. I have so many testimonials from students that have worked with me as well. And again, if it's demanding, like, to see my broker statements, which shows no percentage, no win percentage or anything, just like the finances, how much I make per trade, it's just unnecessary, at least for me. And again, if that's a sticking point, which it has been, and I accept that, then so be it, right? But again, I hope that doesn't stop certain students, like maybe yourself, Alex, from sitting and at least listening to some of the things that are spoken about, because they're helpful. They really are. And I have students that don't go into my private community. They're just starting out, 6 months to 3, 4, 5 years. I have students from the age of 64 to 18. I had a 15-year-old last year, but he just trades demo. I still talk to him from time to time, and he's finding success too. I have a student named Harley that started with me right from the start that has just been absolutely obliterating the market. He shows his broker statements because he's a young guy, and he's really proud of what he does, and he's just getting started. And his everyone's different, their mindset. But from his learning with me, he's also translating things to being profitable as a not even a 21-year-old. Just off of the things that I share in my private community. He started in the free community, and it's spectacular, some of the stuff that we see. Let me see. I'm not talking about broker statements, to call-outs, executions, and such. Yeah, so the call-outs and executions and such are definitely present. I call out executions in my my private Discord continuously, right? Every single day I say, this is a possible entry. This will be a possible entry. This will invalidate, and this will validate the opportunity. And then after things print out, I show that's where I executed, right? So I hint at things because I'm not here to be a signal provider. I don't want people coming here just to get signals. I want them to come here to learn. And if I'm here sending out signals constantly, like I do in my private community, I don't even do it in my private community really. I point out specific framework where I think a good opportunity is, and the student has to make the assumption that that's where they're going to enter. They're not going to enter just because I said get in, because that's a bad teacher. That's a horrible mentor, making people codependent. And if I'm going to be out here building people into codependency, I'm not doing what I set out to do. I promised myself that I would not do that. I promised myself that I would not be egotistical. I would not, try to make people turn into codependent robots. I want them to learn. So then they come here and they hang out because they want to hang out and provide value and be an asset to the community. And obviously, get some value here and there as well once they get to where they're going and on their way to getting to where they're going, right? I know for a fact, at least from my perspective, and a lot of my students have also shared the same perspective, that if I'm here calling out entries constantly over and over and over, it's just going to bring people that we as a community don't want here. I don't want signal junkies. I don't want people that are working at their job wanting to depend on me to quit their job based on my signals. I don't like that. Personally, as a mentor, I don't like that. And yes, it's something that'll stop certain people from joining my private community. But then again, I don't ask everybody to join that community. I don't want everybody to join. I want it to stay exclusive. Maximum amount of enrollment in that community will be at 50. Once I get to 50, I'm not going to have it open anymore. And I'm going to just stick to the 50 that I have because they trusted in me enough based on what I've shared and have learned from what I've shared to do it on their own. So it'll just stay exclusive like that. And then, of course, I'll have my free communities and do my YouTube channel and stuff like that for those that maybe didn't find enough trust or something or needed certain things that I didn't provide. I'll keep presenting the stuff so they can still gain value because there's no hard feelings to it. And I understand completely, but again, it's just something that I've went out to achieve. What's my average or monthly RR? So my RR, I generally use 1-to-1 or 2-to-1. I've averaged for the last 3.5 years, anywhere from 4 to 12%. It kind of fluctuates because there's no monthly guarantee percentage. But obviously, I'm able to trade the way that I trade and live the life that I live. It does enough for me in terms of justification. See, what's your average? Yeah, what's your average RR? RR, you mean monthly return, and risk to reward. Is that what you're referring to? I'm assuming that's what you're referring to. But yeah, that's generally the 4 to 12% a month. Did I say a year? 4 to 12% a month. 3 to 12% a month. Right? And I have obviously a Top Step account, funded account. I have a personal private account which I've grown for the last 3.5 years, based on obviously starting with funded accounts until obviously FTMO kicked me out. And if I didn't have this skill set and I didn't be a lot more smart with my money, thankfully when I was, when FTMO kicked me out because they stopped using or stopped allowing, U.S. based traders, I would have, I wouldn't probably even have the chance to have become a trader still, because I just had too much going on. I had a baby on the way. I had a job when I first started. Still had a job when I was doing my FTMO account. I was able to get up to 400K funding in FTMO. That allowed me to quit my job. Then, of course, a couple months after I took that leap, it was like 6 months after, it ended up totally removing me. So all the money, and they took $60,000 withdrawal that I had loading. So they completely just destroyed everything. So luckily I had some savings, was able to put 50K into my personal account that I have right now. And then I've been able to continue to grow that and use that as a main resource for revenue. And then, of course, my funded account as well. Okay, makes more sense. Oh, and before I answer your other question, 4 to 12% in a year is actually spectacular if you think about it, because most people can't even make $1 in a year. It's obviously not a sexy thing for anybody that's trying to do this full time and be a trader in that regard. 4 to 12% is a decent return for given the statistics that people make no money. And if you think about it, Warren Buffett, some of these big time traders, they only average anywhere from 16 to 22% a year. Of course, they got billions of dollars, but I mean that right there, the most elite traders in the world, most of the time they're not even averaging more than 30% in a year, let alone 4 to 12% in a month, on a regular basis, So that's the perspective that needs to also be considered when we're trying to plan out our goals, especially if we have less than 3 to 5 years experience, especially less than 1 year experience. It's unreasonable for traders to think in certain types of ways, which again, that's something I talk about. Obviously you want to aim for bigger, right? Because what we do is it's spectacular. It really is, just based on what you see in price, which again is the main focus. And so yeah, how's your top step account doing? It's solid. I'm still doing the experiment that I've been sharing with my private community in terms of justifying the rules that I talk about. Like the 1 to 2 trades a day, no more than 1% risk. And then our risk protocols, obviously, that I talk about, the risk plan that I've given, aiming for 20 to 30 points. 20 to 30 points can definitely make you quit your job. Obviously, that's not financial advice, but that's just, it's just the way it is. Do the math. If you have one contract on a NASDAQ E-mini contract, that's $25 per point, $250 plus, depending on if you get 20 or 30 points per trade. You do that a couple times a week. That's taking away a job, a minimum wage job, and again, when you're first starting out, you want to make sure that you're aiming for small goals, build them up, because your skill set doesn't allow you to gain 20 to 30% a month, let alone 20 to 30% a year, right? But if you make around 10% in a year, you might as well go with a fund average 10% a year. Yeah, there's justification for that. There's definitely justification for that. And then, of course, depending on how big your account size is, some people manage millions of dollars in funds, like one of my mentors named Joe Miller does, who is also an ICT trader, going on 15 years. So, yeah, he would probably think otherwise. But, yeah, of course, everyone's circumstances are different. That's why this is it's very important to consider different certain perspectives. In my eyes, 10% a year is as. Yeah. 10% a year is not going to make you quit your job if you're day trading with like a 50K account. But if you have a job and, maybe you're a trader that just wants to manage your own funds, because it's not 10% in a year consistently that these funds make. Sometimes it's less, but again, the ability that we gain as a trader that really dedicates our lives to this, even if you have a job on the side, if you dedicate your life to this, you can have massive amounts of returns well above 10%. I mean, that's the thing. The stuff we do here, I mean, it's insane. It really is. And just stuff we see on social media. I mean, in 3 months, JadeCap made $2 million on a funded account. That is well beyond 10%, right? And obviously that's a baseline. If you're first starting out as a trader, the first year, second year, and you haven't even been able to become profitable yet, 10% as a year is magnificent. As you work your way to becoming what you're trying to become, we can't aim at 100% a year, 50%, 40% a year if we don't know what the hell's happening, right? Or if we haven't even been able to gain profitability. You have a trading bot that you use. Okay, cool. Yeah. That's pretty dope. Nice. 50% past 2 months, but I think funds are still a good way to. Yes, that's nice. Yeah, I kind of stay away from bots. I like to do discretionary, but obviously to each his own. Eventually, I will figure out a way to obviously automate in some form or fashion my perspective, my mindset, the way that I trade. Because, I mean, why not? We're in the era of AI, right? If you could do it, go pay someone a couple $1,000 to get it done. So be it. Yeah, most of them don't work. Most of the bots don't work. I've kind of figured that. I've never purchased a bot. I've never invested in anything like that, and I don't encourage any of you guys to do so. But Alex, since you have found something that does work for you, if it's a bot, that's pretty nice. So let's go. Yeah. I have friends that have given it a try for me in terms of bots, and I'm the type of trader or investor that likes to be hands-on with my investments. I don't want anything or anybody trading for me, including a fund. So I literally have created my own ETFs for long-term stock investing, and I trade those on my own. I have multiple accounts when it comes to long-term investing. I have crypto investing I do, which I also manage personally. It's all self-directed under an IRA. So basically a retirement fund, being my own fund manager. So yeah, that's the skill set that you guys get when you become a day trader or understand trading. You don't have to be a day trader, obviously, but just being a trader, understanding the markets, that's another avenue that you get access to, is managing your own retirement account. So even if you have a job and maybe you don't think that the stress is something you can handle as a trader, like to be full-time, there's nothing wrong with that. And you shouldn't look down on anybody or yourself who thinks that that's all they can do, because maybe they don't feel that it's reasonable for them to trade like we do, or like a day trader does. Maybe it just doesn't fit, and that's totally fine. That's why what I do on the higher time frame is so helpful, because it allows you to have all kinds of different stuff. Or skill sets. Just blasted the whole account. I might as well trade aggressively myself. Yeah. Generally, that's the case. It'll blow it out. But again, at any given moment, something can take place, and the bot wouldn't be able to justify it. Like if it's trading or trying to take an entry during certain news events, even if the bot is in play and has a stop loss, whether you're discretionary or it's a bot that's taking the trade, if you get manipulated out of the trade, or it takes a trade at the wrong time that it shouldn't have taken a trade based on the rules that we talk about, the trader shouldn't engage around, that still is a risk that can happen. That's why personally, discretionary is always going to be what I choose to do. Even if I'm like 80 years old, I'm still going to want to do discretionary. Hopefully I could obviously still see, which is why I got these glasses on, right? Blue light glasses, which I encourage each and every one of you guys to go and invest in if you haven't already. Hopefully by that time, if I could still see, I'm going to still be trading, because I'm just obsessed. But yeah, so I think we've had a decent amount of side conversation. I didn't realize that we've been talking about this stuff for an hour. But yeah, I hope a lot of the stuff we've talked about has been helpful, or at least entertaining, right? Different perspectives that you guys could think about. And just some of the inner workings of my mind and how I see things. But yeah, so in terms of the assets we're looking at, again, there's news that's taking place on Tuesday and Wednesday. So I'm going to assume, especially because we're approaching a bank holiday, we're also approaching a quarterly adjustment. So again, there's FOMC, right? There's some stuff that's taking place, federal fund rate, some of the stuff that we cut our risk by half at least. And then of course, we want to make sure that we're managing our risk properly going into this next week, because there's wars happening. There's so much chaotic stuff just unfolding. The U.S. could be dragged in at any moment. We may already be dragged in, from what I understand. So things can be used to really be sporadic. It's been a more high risk environment all year, just simply because of all the stuff taking place with the economy, interest rates, different financial adjustments, just all kinds of different deals being made, and tariffs and a bunch of stuff. So you've seen the volatility. And again, we've been able to navigate since the start of all this volatility as well, which I encourage all of you guys that may be new to go, spend some time looking at some of the stuff we've talked about. Look at the Sunday calls, see how price played out. And, there's a lot of lessons to be learned from these days, especially over the last couple of months. Okay, so again, the landscape for the news I'm going to see today is not really much. Tomorrow, I don't really think much is going to happen as well, given the fact that, we're going into FOMC, federal fund rate. So Power 3 wise, we want to think of the start of the week being kind of slow because of the wars that are popping off, that are involving the U.S. We may see a gap of some kind. There may be some crazy volatility. So you want to keep that in mind. Again, Sunday, Monday, I'm going to elect to not take any trades. I never trade on Sunday. When I do trade on Monday or Fridays, my risk is automatically cut in half. Monday, because it's the start of the week and I'm trading within the manipulation for the Power 3 on the daily and weekly range. And then Friday is generally the cap of the weekly range. And if we've been extremely aggressive, a lot of times Friday can turn against whatever it was that we did, or it could just consolidate and not do anything at all. This Friday is going to be a day after a holiday, right? So Thursday is also a holiday, and then Wednesday is a day before the holiday. So day before, day of, and day after holiday, the risk protocol that we employ, for those of you that don't know, it's automatically looked at as low probability, high risk. And generally, I don't take a trade day before, day of, or day after a holiday. And if I do, it's cut in terms of risk. And I only allow myself to have one opportunity because, again, we are risk managers at the end of the day when it comes to being a trader. Okay, that word encapsulates the action of risk management in terms of managing funds. That's why the percentages that are made through fund managers is so low. They're not aggressively trying to get big gains because they're managing retirement accounts. They're managing funds to make a certain percentage, which, a small percentage on a large $1 million, multi-million, sometimes $1 billion account, 5 to 10% a year, 10 to 20% a year, is a massive amount of money added to the bottom line. For us, though, with small accounts, less than 100,000 or 100,000 even, that's not really that much. 100,000, 20% of 100,000 is a pretty decent amount. That's still, $20,000? That's still a nice chunk of change, right? But in the grand scheme of things, when it comes to like the big time fund managers versus us as small investors, the mindset's a little bit different. And unfortunately, it's a lot of times steers people into the wrong direction. It kind of puts people into a mindset that's unreasonable because we're comparing ourselves to people like Warren Buffett or people that make these massive amounts, comparing them with some stuff that we see on social media in terms of day trader world. Right. So just keep that in mind. So that's my view for the news and my expectation of what I'm going to view things as and how I'm going to operate. I'm automatically going to start the week at cut risk, cut it to 0.75% of my full risk. You can do more if you still aren't consistent. You're still trying to learn and, you're here to learn. You definitely want to consider cutting it less, even if you're in a demo, because remember, we're building good habits as we're trying to develop. We're not here to impress anybody except yourself. We're not here to, make things happen too quick because it won't happen too quick. If you go in there trying to make it, overnight success, you're going to overnight blow your account. Okay. And that's going to scar you and it's going to be harder to learn. So, some people want to hear that, some people don't. But again, I'm not here to tell you what you want to hear. I'm here to tell you what you need to hear, and just my perspective on stuff, right? So that is my assumption on the news. So let's kind of switch to the COT and observations of the open interest to determine when the switch in contract month is going to take place. So we know that we're in the new quarter. We know that we're in a new contract month, and we have to go into the futures contracts and switch them by what the open interest is showing us. Okay, the active open interest is at 2 million here for the Dow, or for the ES here in June, right? The June contract. So this being more than this open interest, with September contract's the next one. The June contract having more open interest than the September shows that we are slowly gravitating towards getting to more open interest than the current contract month. So when this September contract month has more open interest than the June contract month, that is when we know that we have to go into the assets we trade, whether it's ES, S&P, or the S&P or NASDAQ or the Dow, and we would have to switch the contract month. That is only done when the open interest in the next contract month, being the September contract for this example, is more open interest than, or has more open interest than the previous, which the current for now, previous in the near future, being the June contract month. Okay, so once September has more than the June contract, that's when we will go in and switch our contract for the NASDAQ and the S&P and the Dow as well. Okay, you can also use a continuous contract if you don't want to worry about this. Just know that if you're using the continuous contract, you're going to be missing some gaps in price that we use. You'll be missing some context that is helpful. It's not a be-all, end-all, like we talked about earlier. And some people, don't really worry about it. But I want to have all the information that I look at available. And you achieve that by keeping up to date with the contract months. Okay, so very important. Why is this important? Right? Why is it important to be trading in the proper contract month? Well, because there's not as much liquidity when we move from one to the next. Okay, so there's a liquidity problem because all the liquidity is then moved to the next current contract month. Okay, so again, and then you're also missing some piece of information like certain gaps and whatnot. Right, so yeah. So with that being said, that's a pretty massive number, 3 billion. 3 billion in volume when it comes to the ES cash market. Interesting. So yeah, it's I checked earlier. It's the same for the Dow and the NASDAQ as well. So keep that in mind. I think I'll save the COT analysis for when we do shift into the new contract month, and we'll use that to identify possible shift in overall sentiment using SMT analysis, seasonality, and then obviously higher time frame view. And that whole process we do when we go into a new contract month. We're not there yet, so I'm going to save that quarterly analysis for when the time comes. All right, and yes, so with that being said, let's get down to business with the assets of our choice and supporting assets, that being the bonds and yields first. So the bonds, again, dictates and influences heavily where the foreign currencies are going to go and what the indices are most likely going to be interested in doing. Again, there's been a pretty large crack in correlation overall for pretty much the whole year. It's been on and off, getting in line with what's been taking place. But for the most part, there's been a pretty large crack in correlation. That is basically due to, obviously, all the volatility that's in the financial realm of things. Excuse me. There's been a lot of financial policy adjustments and just a lot of activity in the financial portion of our country, the United States. So that has resulted in more sporadic conditions. Again, it's not impossible to gauge because we've done it all year so far on a weekly and daily basis, which again has been recorded and proven. But it has been a time when there's more risk. There's been a lot of overlapping price delivery in terms of the candles overlapping. Those of you that have spent a lot of time here with me know that overlapping candles on a higher time frame shows us the condition we're in. It's not going to do that forever. It's going to break out following the higher time frame narrative. But again, when you're in a situation where things are overlapping, or there's a cracking correlation between different assets that should be correlated, or the reverse correlations moving with the asset it should be reverse correlated to, those are all indications that we're in a high resistance environment, we're in a lower probability environment, or just a more sporadic, harder condition to trade in. When you see those types of signatures in price, you want to cut your risk. Again, we're really big on risk protocols here and systematic risk management. So, certain things have to take place in order for us to think certain types of ways. And in order for us to be, applying massive pressure and really pushing it, we have to have low probability correlated conditions. And, seasonality preferably is in alignment with that. Like if we have a bullish trend, obviously if we can put seasonality on top of that, it just further amplifies the justification for price to go higher. If we're in a bullish seasonal tendency and other things are correlated and everything is working out, like fair value gaps are being respected to go higher, highs are being taken, so on and so forth. So, we could add seasonality to a scenario like that to further justify. But, when seasonality is not in order, right, or other things are kind of cracked in correlation related to COT or seasonality, that's telling you something. That's telling you that the conditions may be a little difficult. And if that crack in correlation is happening while we see overlapping candles, overall cracks in correlation between multiple assets, maybe prices in a consolidation, all that stuff is telling you again that you want to be very cautious about your risk. Okay, and not scared, but manage your risk properly. I always use the analogy of being in a battlefield. Does a soldier just run into the battlefield just because they want to go get a kill, even when bullets are flying? If they don't have to, sometimes they do, right? But most of the time, if they don't have to, they're going to wait for the right moment, for the right conditions. Then they'll go in and start the attack. It's the same with what we're doing. Our battle plan, our trading plan, our mode of operations, depending on certain circumstances, obviously vary depending on what price is doing, and we adjust our risk accordingly. Okay, so again, we have called for this weekly bearish order block midpoint. It's a 2-week order block. Drink some water real quick. Sorry about that. Had some shit in my throat. But yeah, so we've been talking about for the bonds, our overall bearish invalidation would be obviously this high. Generally, my line in the sand, though, for the last couple of weeks has been the midpoint of this bearish order block. Because if this is going to continue to drop lower and disrespect the SMT that we have between these assets, and it was going to start a rampage going higher, it would have to break through this first. Because remember, we have a 3 PD array rule, where 3 PD arrays, given the time frame we're looking at, in this case, it'll be the weekly chart, we'd have to see 3 PD arrays get violated in order for us to start to consider changing our narrative. Narrative doesn't change on a day-to-day basis, but bias does. Our narrative has been bearish. We had observations up here, depending on what price did inside this fair value gap, that would have determined, and of course, us staying above this low here, that would have kept us going higher. Because that didn't happen and we broke below this low, I called this bearish breaker, and ever since it's been declining. So none of our invalidation levels were broken so far as price has been printing lower. Okay, I encourage you guys to go back and those that haven't seen this analysis with what I just mentioned, go back and watch the video from March, I should say, March 20th through the 30th, and go see what my conversation was like, basically real time talking about this, and then how we were gauging and managing this price delivery, which we were able to be in line with, right? The downside objectives we were in line with, and then all the way up to the point where it invalidated, and then that invalidation level being taken, the respect of the bearish order block and the midpoint of this kept us going lower, right? So all of that pushed us down to here. And again, we've been talking about this SMT. We got this bearish fair value gap on the weekly. It's a 2-week bearish order block. You could see the consecutive candles here. The line in the sand was this midpoint of the bearish order block. that's been respected and we've came off of that. We are above this weekly volume imbalance, so we want to see how price is going to behave around that. If we end up seeing price break down below that, that would be justification for us to continue to seek sell side. Before it gets down to these extreme levels though, we have a wick here. We have each previous week's low. So if we get below this weekly volume imbalance, I will want to see price target down into these levels. Right? So we're in a moment of observation when it comes to this chart. So again, although this has an impact on the foreign currencies and the indices, and the yields also have an impact on the DXY. Because of that influence, obviously we want to make sure we're paying attention to this, but because of the fact that it's in a moment of kind of stagnation, it's kind of stuck, and there's so much crap going on that could change the sentiment at any moment, plus the fact that we're going into a new quarter, we're going to want to be in a state of observation. So we'll do these observations and put this asset and the yields to the side, but we're still going to want to keep tabs on what it's potentially going to do in terms of the critical levels. So again, it's sideways. We had the same observation last week. We were watching previous week's high. I said that that could get targeted. If it does, we need to see it bounce away from this. That took place. So yeah, and then this SMT's here. So we want to make sure we're watching how the PD arrays are going to work or behave going forward into the new quarter. This SMT may turn into a bullish run. Going into the new quarter, seeing the fact that there was an SMT that formed right before going into that new quarter may turn this into a quarterly shift from bearish to bullish, right? So that's a little bit further down the road forecasting going into the new quarter. So we'll see if that is something that has an impact. And that's something I have in my notes as well here on my piece of paper that I did before we talked about these assets. Okay, so I encourage you to definitely put that down too, just to watch this SMT, watch these levels we've talked about. And until this level's closed above, I'm not going to be justifying the narrative changing, because as you guys know, narrative doesn't change. This could simply have been just a retracement to the bearish order block to continue, given the fact that structurally nothing has been invalidated on this higher time frame for bearishness. Okay, so when that starts to change, we will start to change our opinion. Until then, we're going to stick to the fact that this may continue to drop. But again, we have to observe given the circumstances we're in with the new quarter coming. But this is some of the key levels. We have a quarterly bearish order block up here. You saw how that worked out as price printed down below, and it's been respected so far. So quarterly meaning the 3-month time frame, because yes, we look as far as that, and that's in part why I've been able to call the market pretty much the last 6 weeks. It's one of those layering pieces of analysis. Or the last 6 months, not weeks. This has a role, right? The 3-month analysis and the things that we do here on the higher time frame. Okay, so let's see if there's anything else. I definitely want to make sure we have this mapped out. It's another weekly fair value gap. So I would really like to see this leave this high. We have equal highs up here, so we'll see what happens. We're still in consolidation, so we'll see if it breaks down below this fair value gap. My attention would then go down to the wick here and the low. That would also invalidate this SMT. So far, we still have an SMT, so we got to keep paying attention to that as price prints and tries to show us what it's going to do the next couple of weeks going into this new quarter. But yeah, for now, these are the levels I think I'm going to leave y'all with. Let me just double check. We do got a fair value gap in here. We got a volume imbalance in there. Most volume imbalances you'll notice on the higher time frame, like weekly chart, monthly chart. Most of the time, those are new week opening gaps. When you go to the daily, the 1 hour, 4 hour, you'll see that those are new week opening gaps. So just a observation I had a couple years ago, which is kind of interesting. Volume imbalances on the monthly and weekly are generally new week opening gaps, new day opening gaps on the lower time frames. Right. So, but yeah, I can say that if price was to break down below this low, again, my attention goes down to here. I'm going to assume, given the fact that nothing has been violated to the buy side to change us from bearish to bullish, I'm going to just assume that we're going to continue to, attack sell side still. So unless that's proven otherwise by 3 PD arrays being violated, structurally getting violated to the buy side, I'm going to just continue to keep my interest to the downside with this asset. So we'll see. We'll see what happens going into the new quarter. So if that's the case for that asset, we're going to look at this asset in the opposing view. So if we're looking for that other asset, being the bonds, to still be interested in possibly going lower, you're going to want to continue to observe this going higher. All the analysis we've done on this for price to continue to seek buy side and attack this high, attempt to attack this high, all of that analysis from this retracement to this bullish order block to this imbalance here, which we've talked about for the last couple of weeks, all of this stuff staying intact, supporting buy side delivery, all of that has continued, right? And everything we've talked about in terms of this asset, from when it got up above here to respect this wick midpoint, which it did, this order block, this also being a bullish breaker as well, when we drop down to even lower time frames. All of that being respected, we also aimed at this high here. We also talked about these volume imbalances, this high here. All of that was under the context of price continuing to go higher, which again, if you just go back to some of the other videos and see, you'll see evidence and proof that we've called this spectacularly for the last couple of weeks, couple of months. And of course, if you want to go and review the whole year, you've seen every single asset that we've analyzed that I've mentioned so far, and including the currencies, DXY indices, every one of them have went to our targets all year. Yeah, it's a big statement. But again, go back and see the evidence because I've proven it live. Okay, weekly on the YouTube channel. And my private community, I mean, it's just, they've seen it real time. So again, you guys are in good hands. So looking at what we have here, moving forward, we do have relative equal highs still above us. That just further supports that there could still be an attack on the buy side. We do have relative equal highs up here, which is obviously got a ton of liquidity up there. So I'm going to assume that that's going to continue. My line in the sand for this is obviously these volume imbalances, bullish order block, and the swing low. If we get down below the swing low, that's when my overall sentiment changes. Or if we set a fractal low here, attempt to get up to this high, can't get up there, and then displaces down below a swing low that forms, that would be something that would also trigger in my interest to think that the narrative may change from bullish to bearish. If a swing low forms here, there's no need for us to think about this low, right? But if this stays like this, then and no swing low forms on this weekly chart, I'm going to still need price to come down to here in order for me to justify that buy side has been turned off. But again, if a swing low forms here and then we attempt to break the high, it can't, and then it displaces down below something like this, then the break down below the low here that forms, if it forms a swing low and then displaces, that would indicate that we would then start to look for possible interest to the sell side manifesting, especially if this happens going into the new quarter. Because remember, quarterly shifts are gauged from the higher time frame. They're gauged through COT analysis. They are gauged through seasonality analysis, coupled with all these other things that we talk about. Okay, there's only certain times of the year that these things take place, right? And pretty much every, let's say 3 months, a lot of times, sometimes every month, every 60 days. Well, that's 2 months, right? So every 2 to 3 months, there's going to be a shift in sentiment that can be gauged through the analysis of COT, seasonality, and just simply finding SMT on the higher time frame and understanding shifts and breaks in market structure. You can also couple correlation as well. So all those elements bring you to the ability to gauge quarterly shifts. And then, of course, a wrench can be thrown in with all the chaotic uncertainty that's hovering around everybody in the world. So those are always things you got to keep in mind as well. But that overall analysis for sentiment and quarterly shifts, we will talk about that later. But again, as we see here, and as we came to the conclusion over here in the bonds that this should be able to continue to go lower, I'm going to assume that this, if it stays like this and gives an attempt to go higher, stays respecting this and these volume imbalances, I'm going to continue to assume that we're going to continue to go higher. We have relative equal highs up here, so that's going to be something that I want to observe unless proven otherwise, because again, narrative doesn't change on a daily basis, bias does. You could be in a bullish or bearish narrative and have the daily bias or session bias go against it slightly just to set up further runs, right? So you got to be able to understand that. And that's why this logic that I'm talking about, basically the 3 PD arrays and the levels I'm identifying that would change my opinion are so important, right? Because it helps you stay rooted in an analysis, in a narrative, so you're not flip-flopping back and forth like 95% of people do in the markets, especially day traders. You know, day traders, most of the time, if you observe people that go live, they can't stick to a bias for 24 hours. You know, like they can't. You know, it'll flip. Oh, it's bullish today. Oh, well, New York session comes. Now I'm bearish. Oh, it's going to definitely be bearish. Little do they know it's in a higher time frame bullish trend. And then they get smacked and honestly end up on the opposing side of my trade, you know, pay my bills. So, you know, it is what it is, you know. And again, we're able to continuously stay rooted in a analysis and be consistent like you guys have seen the last year because of stuff like this. This is where I spend most of my time. ICT himself has said when he got asked the question, where does he spend his most time? He spends most of his time, as many traders should do, on the higher time frame. There's a lot of preparation and planning from the higher time frame that allows you to be consistently accurate on the lower time frame. You know, it's a hard thing to grasp because everybody has TikTok brain, squirrel attention span, so they can't really, you know, stick to a topic for more than a couple minutes, let alone stick to a bias or a narrative for, you know, a couple weeks, a couple days. So, you know, keep that in mind. That behavior is taken advantage of, you know, and those that are able to submit to patience, holding on to something for, you know, a longer period of time using higher time frame analysis, that's why they get rewarded. Let me go to the chat real quick. Whoops. All right, so what's your bias for the NQ? Yeah, we're getting to the NQ soon. We'll get to that. Could those equal lows be a draw on liquidity? Monthly looks like the end of a market maker model. You're talking about, Fritz, what asset are you talking about, brother? And oh, and the yield? Okay, yeah, the yield. So let me go back over here. Oops. So yeah, we're looking at this. You said the monthly, let me see. You said the monthly chart, yeah. Yeah, this whole delivery up here, right? Well, let's just keep it kind of, you know, in this. I actually talked about this, you know, when I was, you know, first really getting started. I remember I have screenshots and stuff when I was first learning market maker models back in, you know, 2020. I did talk about that. You know, this here was a full market maker buy model, right? But obviously I was very inexperienced at that time. But I mean, looking back and seeing this type of stuff, I mean, it's pretty amazing. It's amazing to know when you're in the right direction and you look back on it and you're just like, wow. Yeah, you said that the yields, 30-year yield, nicely into the, oh, okay, you said the equal lows was drawn liquidity on the bonds. Yeah, you're talking about these? Yeah, so again, that's part of the reason why I'm sticking to trying to continue to look for shorts, because again, our level of invalidation hasn't been met. So that's why I'm going to continue to stick to that. And that goes hand in hand with what you mentioned about that draw on liquidity being equal lows. If it is going to go lower, but you know, before it does do that, that may be what it overall does. Before it does that, though, you want to make sure you're looking at all these previous candles, because these previous candles are what? They're weekly lows. So price will have to dig through those first, so you can build a framework earlier than if it was only to aim down below the equal lows. So each of these weekly lows can be a target you could frame a setup on as a day trader. if the initial overall view for price to go lower is going to be fulfilled and ends up getting down below these the overall possible terminus. Which again, so yeah, keep that in mind. Keep the what is that, 107.047 level identified for the 5-year. Just keep that in mind, or just these lows. You don't even got to mark the thing. It's just a monthly low. So yeah, keep that in mind. You're definitely looking at the right thing. Could those equal lows be a drawn liquidity on the weekly? Absolutely, they can. That is the sentiment I want to see. We are going into a new quarter though, so again, don't put too much aggressive demand on anything because we never know what's going to take place given the new quarter that's coming. So we'll gauge, what it's going to do. It may sweep down below there with a strong displacement to start the quarter, and then all of a sudden keep an SMT. Maybe this one fails on the 5-year, but this one, declines, sweeps that out, then displaces. Or it may leave those completely going into the new quarter, and then use, like I said earlier, this SMT to then start its rally higher and give a bullish quarterly shift. If that's the case, then you can anticipate that the next couple weeks, maybe even the next month or so, can end up continuing to favor buy side. That would be supportive, obviously, if we continue to see the NASDAQ go higher. We'll have an even faster paced buy side delivery because we'll have correlation between the interest rates and finally be back in correlation. 30-year yield dipped nicely into the OT level. Yeah, it did. Absolutely. Good observation. Go from this low to the high. Again, I called for this, right, to go higher. I've been talking about this order block. I've been talking about this low. Before this low became the low that it is, we were using this wick, this breaker, because that's what it is on the daily chart. And then we also use the invalidation as the midpoint of this middle portion of the order block, and then possibly down here if we were to break that. Again, if you go back and look at what I was talking about, I think you were here for that, Fritz. Maybe you remember. But yeah, this obviously been a lot that's happened, and it's all played out. So yeah. So again, that's kind of my observations with this. I want to see if we can get back above this weekly for value gap. If we can, that'd be amazing. I was talking about this wick here being a possible balanced price range delivery. When it traded into it, we could see that it's been interested in digging a little bit deeper, so it's not going to use it in that regard. A lot of times if a wick overlaps a candle like this, if it's going to be excited and be very fast paced, sometimes that'll be used as a support level. And yeah, it didn't use it as that so far. It did for this candle, but it hasn't here. It basically had the intention to reach down to the order block here. So now we have volume imbalance here. We have this order block midpoint, and then we have the low down here. I will say that if we do end up closing below this order block midpoint, that I will then start to look to see this go lower. If we are going to be bullish on the indices, we do want to see eventually the yields go lower and then the bonds go higher. So keep that in mind going into this new quarter. And if the opposing side happens, like if this continues to tank, the yields continue to rampage to the buy side, we may end up seeing something happen in the indices. There may be some kind of drop, given the fact that we've been so aggressive to the buy side. There's a lot of uncertainty going on. One thing goes wrong, we could see things spiral out. Like if America's into a war, if something in the realm of tariffs takes place that's negative, or some type of negative response. It won't long term be too damaging, obviously. But we're just in a crazy news landscape. So we want to make sure we're being very cautious and aware of these things. But until something changes, right? That's a golden rule, right? Unless something changes, that being 3 PD arrays get violated, or some of the other things that we utilize to validate and invalidate. Unless those change, nothing changes. We stick to where price has been moving. And sometimes it's difficult because it'll go against us, right? It'll go against the bias or of the narrative on the higher time frame. The bias may be bearish for a couple of days, but you want to think when it's doing that, if no invalidation levels have been broken on, say, the weekly chart, what is it reaching for to then set up for further moves going to that intended direction, in this case, buy side? right? Which is what we're going to stick to, right? But that's a golden rule. Unless something changes, nothing changes, okay? And you guys have seen that work out fairly amazingly. And, you know, it builds like a trust in what it is that you're doing, which when you can trust things, you get comfortable. When you get comfortable, you start to be able to think a whole lot more rationally. You respect the rules a lot better, and it just becomes a beautiful thing. Trading becomes extremely fun rather than extremely stressful, which is what I hope you guys have been able to work towards. Makes sense that more a quarterly look. Yeah, when the new quarter comes in, we're obviously going to switch to the quarterly chart and take a look at it. I don't look at it all the time, but it's good to gauge, because then we can start to frame out what the quarter could do and do an analysis on that chart. Same way that we do analysis on all these other charts, but we can get an opinion for the quarterly chart. And okay, for sure, you remember. Okay, I'm glad you remember, Fritz. Yeah, that's a testament. You've been here for a while, bro. You've been here for a while. A lot of you guys have. So I'm really grateful for that. But yeah, so that's my opinion on this. Let's see if it can continue going higher. Again, if nothing changes, nothing changes. We got this fair value gap in here. Low to high, we're back above equilibrium. We're at equilibrium though, so remember what I say about the rules of equilibrium and consolidation as well. When you go from low to high, you get your higher time frame equilibrium. Price, when it spends time there, it's going to most likely consolidate. Okay, when cracks in correlation happen, when there's a holiday taking place, when there's those crazy news events, when we're going into a new quarter, a lot of these moments in time, or sometimes even Sundays and Mondays, sometimes Fridays even, depending on what price is doing. If we're at an equilibrium and all those things are layered on top of it, on top of the asset you're trading, the condition you're in is a consolidation. The value in being able to identify whether you're in a consolidation or not, or whether you're in a trending environment or not, the value behind it basically leans on allowing you to manage your risk properly or adjust your risk properly. Okay, so conditional identification is obviously extremely valuable. And again, we talk about that pretty much every single week, identifying the conditions, like what I just said here, right? So we're at equilibrium here too. So again, that's another reason to think that we may have a little bit more shaky conditions, and we're in a mode of observation, just like how we were over here, right? Mode of observation until we get some type of displacement, either supporting what it is that our initial idea is, which is going higher here, or going lower here for this asset as well. Yeah, right. Coincidence, Fritz said. Price happens to be at equilibrium on the bonds as we have a slow week on the economic calendar. Yeah, going into a new quarter. Isn't that interesting how all this stuff aligns? Just further testament that everything's controlled, and further evidence as far as how important it is to be able to know how to navigate price, right? And identify the conditions, so, and what the behavior should be around certain, levels and certain times of the year with certain conditions at play, right? So yeah. So yeah, Fritz, you have definitely learned a lot. You've been exposed to a lot. I hope that a lot of it has been able to make sense too. I'm assuming a lot of it has. Of course, it's not going to be perfect, right? You still got a lot to learn. But I hope that you continue to move forward every time you're here. All of you guys that are here. Again, I'm appreciative of you guys. If you haven't liked the video, subscribe to the channel, definitely do that. Really helps the channel out, helps me get put in front of the right people, and brings more and more good people to the channel as well. And yeah, and definitely share the channel with your friends too if you think they can get some value, provide value, or if they just simply want to come and join us and hang out and talk about trading. Because we're all obsessed, right? We love this game. It's definitely a passion of mine. I'm assuming it's a passion for you guys too, those of you that stay so long on these videos, which again I greatly appreciate. But yeah, so moving on to the currencies, we see that, remember, we have called this entire sell to buy. This whole entire market maker buy model was first a market maker sell model to target the low. All of you guys pretty much on this call from the ones that I've seen commenting, all of you guys have been here to watch this, right? I've called both sides the whole year, right? Even when, in October, some of you guys are newer than, or been here newer versus from October of last year. But my private community, everybody that's followed me since, last year, you guys saw it's been spectacular, up and down, up and down. Right? I've been thinking the same thing. Sufi's been a bit MIA. He's been talking to the private community, but yo, Sufi, how are you, brother? I hope you've been doing well. No worries. No worries. You didn't really miss much. Missed a pretty interesting conversation earlier, but nonetheless, you know the vibes. I'm doing well, brother. I'm doing well. Doing well. Looking to see what's going to happen this year. And it's Father's Day today. Sadly, I can't see my kid because I have a lunatic basically keeping me from my kid. But, it's part of life, right? We all got our problems. Had been to a concert and got home like 4 a.m. last night. Wow, yo. No wonder you woke up late. No wonder. I appreciate you, Sufi. Appreciate you, man. Yeah, so like I was saying, moving on to the currencies, we've called this up and down, right? And it's fulfilled all of our targets, literally. So if you were a currencies trader, you have had swing trades up the ass, okay, for weeks. This was a massive swing trade. Look at the breaker I identified. From the breaker I identified early on, way down here, right, way back in April, you've had this entire swing trade if you're a swing trader. You know what I mean? All the assets we've talked about, like I said earlier, is a pretty big statement, but every single asset that we've talked about, every single objective we've pointed out, aside from maybe, 2 or 3 days out of almost 6 months, all the targets have been fully met. Some days we've had to wait a little bit on those lower time frames, but the bias and narrative overall has been absolutely on point based on all the things that we've talked about. Even up to this point, right? We had this bullish breaker here. Price has used that, respected the midpoint as we've talked about, and it's just continued. Now we've set equal highs on a monthly view. We may be ready for some type of retracement. It may do that. But then again, we may gap up, so we'll see what the open does today as a result of all the chaos we've been seeing. So, yeah. And this has been moving higher. We've got that quarterly bullish order block, right? The 3-month bullish order block, the quarterly fair value gap inversion, this weekly fair value gap, all of that layered on top of the quarterly time frame. Our invalidation levels, right? We had this wick, we had this swing low down here. When price was down here, I said I wanted to see how price is going to treat all this, and we've just continued to run higher. So given the result we've seen, my line in the sand for invalidation for this to continue going higher based on this weekly time frame would have to see this down candle get broken. That's 1. This wick get violated, the midpoint, that's 2. The fair value gap in here, that's 3. The monthly fair value gap gets traded through, that's 4. And then we got the swing low down here, which would be 5. So if it gets down to there, that changes the narrative. Otherwise, we're going to continue to see any retracements going lower for a slight bearish bias just to set up bullishness for our higher time frame bullish narrative that's still intact. The market maker buy model has played out beautifully. This market maker sell model, which I also talked about, has played out beautifully to get below the low. Once it broke down here, created this as a bullish breaker. I called that as a possibility. I said, watch that. It's probably going to stick to it. And I said, once we get up in this level, it should be pretty fast paced to get up above the highs to finish the market maker buy model. And that pretty much beautifully delivered. The wick here, like I was talking about the wick behavior, a lot of times a wick that forms that overlaps fair value gaps in previous candles can act as a support level or a balanced price range. So you can see how that wick behavior has beautifully been on full display. And yeah, ever since we've just been marching higher. So I think we're headed for the monthly high up here. We have another one up here as well. Because we're so overly delivered to the buy side, be ready for some type of short-term retracement. That day that presents us that, if that does happen, can be classified as a bearish day slightly. So, with that being said, keep that in mind. Think of power of 3. We may open up for the week, drop down with a wick, maybe use this order block, maybe dig as far as this, but we don't want to see us get down below here. So this is our line in the sand for the overall analysis, continuing to go higher. Okay, we got this monthly fair value gap, and very similar things taking place with this as well. My line in the sand again is going to be the swing low down here. As long as we stay above that, my narrative overall, whether it declines a little bit or not, if it stays above it, it's going to be bullish. Now, if we break that, then that's when we would turn bearish. Okay, and start looking for lower prices, maybe this fair value gap, so on and so forth. So yeah, this here is our previous week's high, so you want to mark that off. Remember, at the start of every single week, also at the start of every day, but specifically for the start of the week, you want to mark off previous week's high and low. You also want to mark off the previous Friday from last week's high and low. Those are going to be your liquidity pools, your main liquidity pools, and then the daily candles, highs and lows from the previous week, right from Monday, Tuesday, Wednesday, Thursday, Friday of last week. You want to make sure you identify for targets, right? So if price goes higher, if any of those on that list are in alignment, you can use them as short-term targets. In this case, it'd probably only be the weekly. If I'm not mistaken, yeah, it'd only be the weekly high pretty much, and Friday's high. To the downside, though, you have the other days, right? This is the weekly low. We got the other previous week's low here. We have one here too. So it's relative equal lows there. So if it does retrace, I'm not concerned really. Okay, we still have a fair value gap here that's coupled with those lows that I just highlighted. If we were to try to find a power 3 going lower to start the week, just to set up and go higher, we may see a bearish power 3 that ends up targeting this fair value gap for this week. That's a possibility, right? So we can't discount that as a possibility as well. But all of that is still working within the bullish higher time frame narrative that's going higher towards these monthly highs. We have this fair value gap that would set it up, and our inversion fair value gap, or our invalidation level is this swing low for buys. Okay, but don't be fearful to try to frame out or at least study a framework for price to go opposed to the buy side delivery, just to set it up, because it's a power 3 study. Okay, so you should be doing that every week. Study how price opens up compared to the previous week. Keep in mind the liquidity list, the list of liquidity pools, which I will pull up. I have them in my free community, but I'll make sure that I just pull them up real quick so you could see them real fast. Right. So yeah. So take a screenshot of this, and this is our view. It's pretty much what I talk about every single Sunday, and then as we move forward. So yeah. So yeah, these are critical liquidity pools. You get good at mastering identifying those and comfortable identifying those on a daily basis, weekly, monthly, quarterly basis. You will always have a liquidity pool to frame a bias on. Okay, so yeah, that being said, hope you got a chance to screenshot that. Again, my ideas are aiming at buy side delivery, but I would not put it past them to maybe open up and decline first, maybe even open up, sweep previous week's high, sweep this equal high up here, then maybe have a bearish week next week. I wouldn't be surprised if they were to do something like that. But unless that's proven, we're going to stick to price possibly opening, going lower, maybe targeting one of these lows here, some kind of sell side, maybe even getting back into this one more time, or hitting this fair value gap to then go higher. Okay, and so yeah, that's what I would like to see. That's what I'm going to wait for, and we'll see how price behaves around that. Again, invalidation level for buys overall for the narrative is this swing low and this swing low. And yeah, as long as that stays intact, we will continue to march forward looking for buy side liquidity. Okay, so now we're going to go to the DXY. I'll try to fly through this. I know I've had you guys here for a while. Sorry about that. Took longer than I anticipated. Kind of talked about some things I didn't anticipate. But yeah, so we called this market maker sell model. It fully delivered. I called this bearish breaker. It's still continuing to deliver. Talk about this for a value gap. I set my line in the sand for bearishness for the DXY as price was printing here was this wick. I wanted to see if that was going to be respected. It was. It couldn't even get to it, and you could see the result of that continuing the higher time frame narrative. Bias for a couple days as price retraced from this higher time frame view was obviously bullish, but we framed it out looking for premium arrays to then further set up sells. But framing a counter trend idea, even if like you're bearish, for example, framing out buys with premium arrays that are going to be used later on to set up further shorts in the grand scheme of things is not a bad idea to, operate within. Sometimes people will be more comfortable targeting this type of stuff rather than the continuations. I have a trader or two that has that type of perspective. There's nothing wrong with that. It just depends on what works for you, like I was talking about earlier. But yeah, this understanding that the narrative is different than the bias, and that bias can be opposed to what the narrative is sometimes, like it was here. Narrative's bearish, bias for a couple of days was bullish to set up into a premium array. That's a beautiful way to become very advanced when it comes to price navigation from PD array to PD array, from bias going against the narrative to then setting up the narrative, but then staying rooted in that narrative. Where this is a beautiful example of that and why it's so important. And I know most of you guys probably know this topic, but yeah, I just wanted to reiterate how important it is because it's vitally, vitally important. And part of the reason everyone's here, or part of the value in what it is we do here, is price navigation on full display, like how to do it, what's important, what's not, validation, invalidation, so on and so forth. But then obviously higher time frame analysis and really being able to navigate price in the proper way. Right. So yeah, given what we see here, again, we've hit this low, this quarterly low. Again, all my targets that I've outlined for DXY have yet again continued to be justified and accurate, right? Holding on to my narrative that I've been presenting for the last couple of months has been completely accurate. All my targets that I've started every week for the last couple months have been accurate and fully fulfilled by the end of the week. And now all the way up to the quarterly fair value gap, which I had outlined once we broke below here, even the quarterly target has been met. Okay, so because we've hit this, it's kind of suspect to me because this has met this level going into a new quarter. So again, it's going to be very important this next quarterly analysis to see what the idea is going to do, or what the overall sentiment is going to continue to do as we walk forward into the new quarter. We may very well see a turnaround. You never know. So we're going to have to just see. Just show us the crystal ball. It kind of seems like that at times, huh? And Sufi started with me on YouTube, and he liked what he saw here and came to the private community, and now, he's an even deeper part of the family and becoming a serious asset. Because Sufi, you've been doing pretty amazing. You still here. I'm gonna call you out though. You still haven't sent me what I requested, right? Well, a lot of my private community hasn't. I'm gonna have to remind them all. But remember, those 10 categories. I need your processes for each of those categories. Slowly but surely. Do one today. Yeah, I know you're busy. You got busy life and stuff. You're a young guy too, so you got things to do, concerts and whatnot. Go live your life, right? But slowly but surely, just do one at a time. You don't got to do all of it at once. It's a lot to ask, and it's a lot of thought that has to go into identifying these things. But you have to do it because it'll gauge where you're really at. It'll show me what I need to focus on for more heavily with you, and your questions and things that get difficult to you that you share with me that may not be sticking instantly. are also things that I can focus on to also help others as well. So again, every question you guys ask, either here or in my private community, is helping someone else. You're passing help forward by you being transparent enough and confident enough and just, comfortable enough to ask any questions that you have. It's part of, the value in the community, because it's the value that I get from you as well. Just like how you get value from me, you guys asking questions and challenging me as the mentor by asking difficult questions or pointing out certain things, it helps me improve as a mentor too. I wouldn't be the mentor that I am today if it wasn't for all the questions and students that I've had to help get out of certain things and improve on certain things. So yeah, thank you guys as well. And I appreciate you as much as you appreciate me. But yeah, so if you don't freaking procrastinate, damn it. Yeah, right now I am in mental battle stage. All right, yeah, so maybe later we can hop on a Zoom call and talk a little bit deeper. I have 2 other Zoom calls with a couple other students today. But Sufi, maybe we could hop on and you could tell me a bit more about that so we can make a plan, make some solutions, all right? Yeah, don't worry about it. Don't stress about it. We all go through it. And, there's still a lot to learn. And you've been learning a ton the last couple of weeks, months, right? So, it's crazy, so expect it, right? Expect things to somewhat feel disjointed at times. And the mental battle, aside from the overwhelm from all the stuff that you're learning, expect it. Just expect that the enemy is there. And also, though, expect that you're going to overcome it because you got the right information. Remember, you always have support. Don't sit there and struggle in silence. Always let me know. I'm always here. DM away, right? And then just a simple schedule away from, hopping on and working with you. Do everything. And then, you have all the students in the private community, too, that are, either a little bit ahead or have answers that they can also share with you as well. To be honest, I was waiting for this stage and see the other people. Let me show up and confront me. Yeah. It's that's the thing. There's so much stuff that we're not fully aware of at first. There's battles that we don't even know we're going to have to fight when we first start trading. We don't know what we don't know. And most of the time, this is why I teach and talk about the things that I do. This is why I teach the way I do. This is why I talk about the things that I do. This is why I focus on some of the stuff that I do. Because you'll see a lot of students will come here, expecting certain things. I need to get an entry. Show me the model you're using. What is the bias? Like right away as I'm like explaining something. And I'm sitting here thinking like, man, you just don't even know what's happening or what's ahead of you. Like you can't see the value of something early on when you haven't experienced something that requires that value to be experienced or digested. As a new trader, we don't know what we don't know. There's so many things that I was not aware of when I was first starting out, just as you guys are figuring out, and will continue to figure out. There's a lot of stuff that are still going to be just randomly popping up that you got to overcome. And each new level you reach as a trader, when it comes to either profitability or just knowledge-wise, there's going to be new demons, right? New levels, new demons, new battles to overcome. Until you just get to where you're trying to go. And even when you get to where you're trying to go, there's a next level. So there's going to be more demons. Every new level, every new concept brings more problems, more demons that you have to learn how to overcome. All right, not problems, I should say, but roadblocks, essentially, right? Oh, no, Fritz, I wasn't referring to you, brother. Fritz, I was not referring to you, I promise. Oh, I promise. I know specifically who I'm aiming at, and the specific people and type of people. But yeah, I'm not aiming at you at all, and with that statement, or any of you guys, essentially that are on this call. It's just talking about signal junkies, people that are demanding, people that come in here with their preconceived notions, just like really aggressive opinions. This is what separates you. Yeah. DXY price closed below, or price closed this past week inside 3-month fair value gap. Yeah, quarterly fair value gap. That's what this QFVG is. It's the quarterly. When I refer to quarterly, I mean pretty much 3 months. But yeah, it's a beautiful observation. Mind you, when we were all the way up here, I said that if it was not going to continue going higher, it's going to continue to drop lower and fulfill this. Even when we were over here, when I was talking about price, I was mentioning like, hey, this is probably our target. Before that, though, we could probably hit this quarterly low. But if it's just going to continue and leave this upper area, it's going to continue to want to press lower. Yeah, no worries, Fritz. No worries, my friend. Yeah, and if you take that quarterly fair value gap too, and you break that down into quadrants like this, boom, go like that. Notice how we hit right beautifully. Chef's kiss perfection at the midpoint of the quarterly fair value gap. Isn't that interesting? Must be random. Yeah. So we must be getting lucky, right? We must be the luckiest people on the planet to be just calling the market and it just goes to where we want it to go, right? And all these different levels that we talk about where it respects it, we must be just the luckiest people on the planet Earth. And ICT must just be like, who knows? Like he's like a prophet of some kind, because he's just giving everybody else the answers and everybody else is learning to do it on their own. I mean, who knows? Like, dude, it's like insane luck we must be stumbling across, and I think it's the hand of God, to be so honest. I mean, the hand of God has been shared with each and every one of us that pay attention to this and are good-hearted, because he just opened up the doors. He touched ICT, and he's been able to really have a strong reach, very large net that's caught so many people and blessed so many people. I mean, and thankfully, we have been pulled into that sphere. Some a little bit sooner than others, but all that matters is that you've made it here, that you've stumbled across the concepts, and hopefully you guys being here can also be a blessing to you as well, because I'm trying to pass my blessings forward, and I'm grateful to see that a lot of you guys have been benefiting from that. So yeah, it's something I'm grateful for. But yeah, so we'll see how the reaction is going to be down here. It did close below this low, so price swept this higher time frame low. Let's see how price retraces. It has already started and not spent or closed below. It hasn't spent much time down here, and it hasn't closed below. So we'll see. We got back above that fairly quickly. I don't really like that when price delivers through a liquidity level and then closes quickly back above it without closing below it. Sometimes that could just mean that this was a stopper aid. Generally, close below, it's a little more significant in terms of how aggressive it's going to be in that direction, in this case bearish. So we'll see how price behaves when it returns into this fair value gap. And Chowezi said, is it safe to say that quarterly fair value gap is in a monthly breaker? Where exactly, which, we're talking about this delivery here? In all honesty, I think this delivery is a little too sporadic to be a reliable breaker, given the fact that it's already kind of been traded into and pushed away already and then came all the way back. Hanging around too often in an area, too long in an area, generally makes it so it's less likely that it's going to play out. Having that breaker opinion could have been a little more reliable when we were over here. And I mean, you could see it kind of couldn't even really break out of it. So the interest had to utilize that. I mean, it did give a lot of displacement, but there's been so much crap happening since 2023 when it initially delivered into it. I would say that this is an issue. I think this is probably going to fail because of how many times it's traded into it. But that doesn't mean, obviously, that this quarterly fair value gap is going to fail. Doesn't mean that this quarterly fair value gap is going to, it doesn't mean this is going to fail either, right? So we're just gonna have to see. We've delivered back into it. The breaker idea, though, I definitely see as unless we get a displacement aggressively back to the buy side, I think that we're going to still just trade through this quarterly fair value gap, right? So target for the week for DXY, I want to see, similar to what I talked about with the currencies, an opening, retracement against what has been happening. So in terms of the currencies, I want to see a retracement lower to go higher. And then for the DXY here, if all that stuff's going to stay intact, I want to see us maybe retrace into this wick and then try to reject and then fulfill the rest of the quarterly fair value gap. And then whatever happens within that quarterly fair value gap, if it displaces below it aggressively, we're still in a pretty heavy market. But if it displaces through it, closes it, and then gets back above it, and then starts to break some of these levels up here, I mean, we may be in for a quarterly shift. That would result in the currencies tanking. And that may also result in the indices maybe giving a retracement down to the sell side, attacking some lower prices. I don't, at the moment, see that happening. Of course, that could change if things change, but nothing changes until something changes, right? So we're going to stay clear on what it is that we're looking for. My target, as has been the case, is still going to be seeing work happen inside this quarterly fair value gap. But before we continue to work within the quarterly fair value gap and try to fill in the rest of it, we have this weekly low here. So we got the weekly low, and then we got this weekly high up here. Okay, so that's something that I'm going to monitor. Whether price is going to continue going up and attack the high up here and turn around, or if it's going to want to continue to go lower, we still got to break through these two levels in one way or another. Not both of them at the same time, but one is going to have to be targeted. You know, one, maybe the previous week's high is targeted with a wick. Maybe it respects this up wick here, and then that pairing of liquidity is then used to take out the previous week's low here. All right, so maybe it uses both, depending on what happens, going into the next week. Right, but I would assume what I would prefer to see is this quarterly fair value gap hold price with this bearish or down wick, the midpoint. And if we move up a little bit, we could see a order block here as well to use, but then we also can see a bigger wick here. So there's a lot of reasons in here that this specific area in price should act as a strong resistance level and continue to push price lower. Again, if it doesn't, and we start to see these levels that I've just highlighted for you get violated to the buy side, then we start to build the possibility for price to want to dig up into like this wick, the upper portion of this wick. This is a high here. It's a 2-week high. And then we could, if that takes place, pushing deeper into the monthly fair value gap too, showing no respect to that, then we could, maybe look to adjust and start to make an argument for price to go higher, which would then send the currencies lower and the indices lower too if there's a bullish DXY. But because there's a bearish DXY still and nothing's changed, again, it just supports the buy side delivery continuing in the currencies. And then that also translates to continued buy-side interest in the indices, right? So you can kind of see, those of you that haven't been here for that long, you can see why all the stuff that we've talked about previously with all the other assets, when we finally get to this point in our trading, risk on, risk off wise, we have a good indication for what's going to happen and what should not happen. And if something changes, we'll be able to quickly know and make adjustments, right? So I'm going to continue to favor downside in the DXY. I'm going to see if we can continue to hold these areas like I just mentioned, and then with the overall view, the price is going to fill in the rest of this quarterly fair value gap completely. So yeah, we'll see how this middle portion behaves. We got a bearish order block here on the daily. That's within that large weekly wick. We have the quarterly fair value gap high, which is there. We have a volume imbalance. We have this down wick here that overlaps this volume imbalance here. So we have a return into that. Price is closed here. So let's see how price opens up here. Is it going to run up, maybe to attempt one more time, then look to decline? Is it going to run as far as this previous week's high, sweep that, then look to try to tank based on the weekly framework from the weekly chart? Or again, is it just going to, maybe be lethargic in here, continue to respect the quarterly fair value gap, and then just continue to tank up until it breaks through or closes in the rest of this quarterly fair value gap? That's what my assumption is. That's what I would like to see. Any of those circumstances that lead to price tanking can be considered. Obviously, we don't know for certain, given the fact that the market's closed right now. We don't know which mode of delivery it's going to use. But overall, the narrative is still bearish. So I have no reason to think otherwise until something changes. And because nothing's changed, nothing changes. And that's what we're going to support, is continued downside in the DXY. Okay, and those were some of the levels I'm wanting to focus on. Okay, so if we go to the monthly chart, let's turn that off real quick. Okay, so we could see how the overlapping fair value gap here, with this overlapping fair value gap, has led to this behavior acting in a balanced price range fashion. That has supported us going all the way down, going all the way up, and being able to navigate both scenarios. A lot of it's been rooted in the higher time frame. You can see how easily that is justified for continued buy side delivery, given the fact that this higher time frame's being observed same way that we look at everything else. But we apply this overlapping fair value gap theory as a balanced price range, and you could see price has not even come back into there. So with that being the case, that presents us with evidence that this signature is in place, that buy side is still interested in going higher. Overall, I'm looking for the previous week's high to be taken, or it's the previous month's high from February. It's also a previous week's high, but let's actually just mark that as a monthly high. I don't know why I had it as a weekly high. So yeah, we're going to continue to see if this balanced price range in here is going to continue to be respected. If it does continue to be respected, we're going to continue to see price march towards the buy side. So if we go into the weekly chart, actually let's go to, so yeah, the quarter, look at how messy the last couple quarters have been. Again, this delivery down to the low here, if you go to the continuous contract, you'll go and see how we gauged the yearly bullish order block, and this as a bearish or a bullish power 3 dynamic on the yearly perspective. I talked about that as price was printing down into it, so definitely go look at some of those videos. I talked in great detail about that. I also marked off this entire run lower. And same thing with the DXY as well. So yeah, lots of stuff again you could learn from these previous calls I've done this year. So many things. I mean, it's insane. So that's why a lot of you guys that have spent time here and been here consistent, you have been getting massive results. It's like, you're shadowing somebody that knows how to do it, and you're learning the concepts and you're seeing it play out. And I'm not a rocket scientist, so hopefully it's been valuable to you guys. And those that are new, hopefully you do find it valuable to go look at some of those videos. And, hopefully you also feel more comfortable asking questions too, because questions are assets to this community. All right, so yeah, with that overlapping balanced price range idea on that monthly chart, with that being the case, as long as we don't revisit this fair value gap, I'm going to continue to support the fact that we're going to continue to go higher. If we go to this weekly chart, we have a weekly bullish order block. Fairly simple. Oh, whoops. What the hell? So we've got that weekly bullish order block. We have all this stuff on the back end that we just talked about that's now brought us to this moment. So with everything being talked about and all the opinions that we've had across the board, looking like continued bullish currencies, continued bullish DXY, some of the scenarios that we talked about in the bonds and yields, but of course we got to wait for those. All that information with all of its intricacies now brings us to this. Continued buy side is most likely in the cards for the indices as a whole. My target has been this high up here. These relative equal highs, I've classified this as a market maker buy model. We were able to pinpoint and locate where the retracement was going to stop, and then where the turning point was going to be, and then further confirmation. That whole process from bearish to bullish ideas was also talked about when I was talking about this area being a type 2 dealing range. Once this broke above this, you can go back and look at the videos I talked about over here and over here. I mentioned there's a type 2, type 1 dealing range. This was a type 2 reversal dealing portion of a dealing range, which then creates a balanced price range when it's fully delivered through the high that creates that dealing range. You could see that from this high to that low, the midpoint, once it broke above, was never even attempted. And so as a result, my narrative has been continuing to be bullish. And then as a result of that opinion with all the supporting ideas, you guys have seen the result and been in the right side of the market for weeks on end at this point. So it just shows how important the higher time frame is. And if you can submit to the higher time frame and the concepts that allow us to gauge what it's going to do on those time frames, you can have bias and narrative for weeks. Seasonality, COT, they also have played a role in the back end for me to continue to support or see when there's low or high probability conditions, and likelihood of certain things taking place or not. Again, it's not a be all end all like I had a conversation about earlier, but it's part of the process. So of course I'm going to mention it. But yeah, I hope everything up until this point, for those of you that have been with me for a while, hope all this stuff has been enlightening. I hope it's been impactful, and I hope it continues to help you grow, right? So with all that being said, all the stuff that we've talked about, again, we're here at this weekly fair value gap inside of this order block. Remember what I've said about when price is delivering aggressively in one direction. When it hits an opposing PD array, that will be a time when we start to retrace. Here's two beautiful examples of this. It's been bullish. Price was bullish, hit this weekly bearish order or bearish fair value gap, and then a bearish candle took place to retrace and set up further buys. Price continued to run higher. Yet again, it hits an opposing PD array to that buy side delivery, and now we triggered in another retracement, right? So I think that this bullish order block on the weekly chart, if it's going to continue to hold, I think this bullish order block, given all the chaos and uncertainty and craziness that's going on, I think this can very well be the point in price where we end up getting a fast-paced delivery to the buy side, especially off the heels of this entire move being mapped out as a market maker buy model. If this is a market maker buy model, we are currently and have currently from the previous weeks, past 1, 2, 3, 4 weeks, been engaging in a second stage distribution on this higher time frame weekly and daily market maker buy model I have framed out for weeks. Okay, so I think that's going to continue to hold up, and as long as we don't break this low down here and violate this bullish order block going to the buy side, I think we will continue to go higher. And I'm going to continue to justify that through all these other things that we talk about, obviously. And yeah, so Fritz says, observation, the distance from the weekly closing to the relative equal highs and the bullish fair value gap of May 12th is about the same. Distance from the weekly close the weekly close to the relative equal highs. Are you talking about like right here, these relative equal highs? Any significance for consolidation at the start of the week? Oh yeah. So the all right, let me first look at what you were just mentioning here. So these relative equal highs, right? You're referring to these? I'm going to answer your question related to consolidation because it's a very, very important question. It's a very, very important question. But yeah, in terms of the equal highs you're referring to, are you referring to these highs or these relative equal highs? So the far ones, right? Okay, so just take this week's range. Yeah, that's pretty interesting, huh? The weekly range, it's pretty interesting. Yeah, there's something you could do with this too. Watch, take this low to this high. Use that as a fib projection. And you could see the 50 level, the half a standard deviation given the breaker, right? As a fib projection. That's part of the reason why I was pretty confident in the fact that this is going to go higher in this market, as this market maker buy model was printing. That's why I've had this high, although it's been a little bit far away, as an initial target, potentially longer term. It may take until the next quarter to get us there, but isn't that interesting, this projection tool? When you have a breaker, identify the low and the high of the breaker. If you're going higher, put it from low to high. If you're going lower, put it from the high to the low. That's going to set up the breaker. In this case, this was a mitigation pattern, right? Mitigation block from this high to that low. This block down here, you drag that over. You can also use this here as a breaker within that larger structure. But even with that, right, if you go from this breaker down to the low here, look how beautiful the 3 standard deviations was. This 3rd standard deviation was in alignment with the yearly bullish order block, which is why I figured that that was going to be the turning point, because all these other ones didn't align very well with the PD array and all the news and stuff. So I was like, I could get down to there. Once it got down to there, look at how beautiful that was. I think you could even map this out too. That's less accurate. Not really. Actually, that's pretty exact. So yeah, the mitigation block had a breaker inside of it, but this mitigation block was the actual parent swing because the breaker formed inside of this mitigation block. So you could see this projection tool. It's pretty fascinating. And then you align those projections with PD arrays. They're logical based on where price is headed, and you'll be very surprised at how often you will be able to find specific targets as long as they align standard deviations with the higher time frame narrative, first of all, but then standard deviations align with PD arrays. That makes sense within the narrative. But yes, so your question about any significance for consolidation at the start of the week. So yeah, a lot of times when consolidation happens at the start of the week, say Sunday, Monday, going into Tuesday, or even sometimes Tuesday entirely, a lot of times that's caused by the sentiment buildup that they are doing in terms of waiting for the news event, right? So they're building sentiment, manipulating, keeping people stuck in a range, trying to get both opinions stirred up, so then eventually they can purge both of them out or just really smash through one of them, which is always pretty much in line with the higher time frame narrative. The lower time frame looks chaotic, but again, news events generally are used as macro times for higher time frame delivery, because that's when institutional sponsorship comes in. That's when manipulation comes in with the hand, right? The people that move the market. Generally, they use those excuses. Wars, right? Economic chaos, riots, anything and everything that they can possibly spin and use for a reason to shake the marketplace, even if it makes no sense at all, they will use it. You know what I mean? So yeah, the significance of consolidation at the start of the week generally can mean they're waiting for something, right? So especially if there's no news, a lot of times there will be consolidation because there's nothing to move the market aside from just the day-to-day volatility, which sometimes is enough, right? You guys have seen things move still, and there's moves to identify, but the big prolific moves a lot of times, not every time, but a lot of the time, will come from news events and certain days of the week: Tuesday, Wednesday, Thursday, preferably. Tuesday, Wednesday expansion, and generally Thursday can be the opposing view of that, or Friday, depending on when the PD array that's being targeted is met for the weekly delivery. Right. So if we start the week with consolidation, just remember there's no news Sunday. There's some news on Monday, but there's also there's also FOMC conversations going into Wednesday, Wednesday. Yeah, going into Wednesday, and then there's a bank holiday. So this is preferably not a day you look to trade at all. You could study, but again, it's going against 2 rules, right? It's first of all, high risk because of the news events. If you're new at trading less than a year and haven't had experience navigating this stuff, this is your view. I can trade anytime. I don't care what's happening. I prefer not to in certain circumstances, but I'm not encouraging you to do that, right? Any of you, until you get some experience. And then, once I start getting a lot of questions about how to trade FOMC and all these things, which I do sometimes in my private community, then maybe I'll start to talk about it more. But I encourage you to study it, because that's what you have to do first. You don't go to a job and get thrown some instructions real quick and then just all of a sudden start doing things at a professional level, especially high risk stuff. You need to slowly work your way up, and then with a trainer, then you get a shadow a professional, then you get to do a little bit on your own, and then you can fully do it on your own, right? But even even professionals a lot of times don't even look to take trades here. Guarantee you that big hedge funds are not looking to try to catch FOMC when it's printing. Even the risk is too great for them. So there's rules around it, but this is crossing over two rules, right? The fact that we have a significantly risky news event with multiple things, there's FOMC and federal fund rate, which is two events that are, supposed to be dealt with caution and lower risk. But then you also have to add the fact that there's a bank holiday on Thursday. So we're also falling under the low probability anticipation or low probability condition anticipation rule for a day before, day of, and day after a holiday. So again, we're also going into a quarterly adjustment, a new quarter a change from one quarter to the next. So all this stuff coupled together could lead to consolidation, very manipulated price delivery, not really much of a fast-paced environment. So you want to keep that stuff in mind. So again, that's not something to be scared of or mean that you can't look at the chart or can't look to try to engage if you must. I encourage you not to, preferably if you're taking my advice. But if you do go in there, don't be fearful and study. Right? Look at what's happening. Study the characteristics. What happens in London? What happens going into New York session? What happens as a result of these news events when the week ends? That's a much more profitable study than going in there trying to engage because you think there's going to be crazy volatility. There may be crazy volatility, but if you don't do what I just mentioned first, study it and get a feel for what's happening, you're not going to be able to effectively engage. And you're going to miss the learning opportunity because you're so focused on the entry, so focused on not losing a trade, that all your focus will be pulled away from what's truly important for something that's not entirely important, which is taking an entry during a crazy news event or a week that has a holiday plus going into a new quarter, right? That just like the day before, day of, and day after a holiday is classified as low probability, high risk. The week before, week of, and the week after a quarter swap over is obviously the same, right? The week is classified as low probability. The week before, the week of, and the week after. So all those are higher risk. So that's, again, not to say you can't go in there and try to find an opportunity. That's not to say that there won't be opportunities present. That's just a piece of advice to make you aware that you should probably lower your risk if you're going to engage. Because, the best of the best traders know when to push, when not to push, and they are doing one thing professionally over everybody else. That is managing risk. How do you manage risk if you don't understand how to navigate certain conditions? Right? Like that statement alone is just hopefully eye-opening to some of you who are so focused on entries or other stuff outside of the one important thing that's the most important, and that's risk management. You as a trader, if you go work for a bank, you're not called a trader. You're called a risk manager, portfolio manager. They even have departments that are professional risk control, right? Like it's that important. There's people that teach their traders, their money managers, their risk managers, how to manage risk, how to behave in certain circumstances. So are you doing that for yourself? Right? Are you being your risk manager? Are you being like the trainer that's teaching the trader inside you to do the right things? You have to carry multiple hats. A money manager for a bank generally has a lot of different things he's doing. From adjusting the investments to managing the risk on those investments to taking the entries to capitalizing, to maximize the profits that they get based on their set of rules. But they have a set of rules. Are you managing your trading that way? Or are you just coming in here trying to play like this is like a gambling slot machine, looking at it like it's a video game, thinking that this is like not something professional that demands respect? Because it'll make you respect it if you don't, which I'm sure most of us have learned over time, especially early on. We've gotten our eyes poked out, like wanting to rip our hair out, feeling days and days, sometimes months of anguish because we just simply tried to do too much and didn't know what we didn't know. So, you want to ask yourself, is every base covered? Are you paying attention to the things that are most important? Are you listening to the things that get talked about that I highlight or the ICT highlights that are of the utmost importance? And are you spending enough time on each of those different categories? Whether it's bias and narrative, your overall process for each different element, risk management, targeting, validation, invalidation, which is a lot of stuff we talk about. We pretty much talk about all of it, right? But, how often are you spending time on each of these subjects? How are you managing yourself in a trade? How do you manage the trade in itself, aside from your mindset? That's a whole process as well. Would you be willing to look at the 15-minute chart for just Friday and talk us through the draws and liquidity for the day? Frame PM session is bearish, mainly because I worked on the weekly power 3 candle. Yeah. For you talking about NASDAQ? Even though looking at it initially, I was very bullish. Yeah, well, going into Friday, since price was bullish, I believe, was it bullish? Let's go look. Well, going into the week, seeing how every single day was pretty much bullish, we were still in a bullish trend. The fact that we hit this opposing PD array definitely put it in the cards for price to want to retrace or go against whatever was taking place, especially because, again, last week was the week before the quarterly adjustment, which comes today, comes tomorrow for next week. So the week before is generally a harder to trade environment. Notice how as we approach that quarterly adjustment, price started to slow its roll versus what it was doing all throughout the time when we were trading between the quarter, right? Very fast, right? I looked at the charts for the first time Friday, just after lunch. Yeah, perfect. Just remember too, when you're in the chart, don't always think about an entry, right? Try to focus more on how you feel about your ability to identify what price is going to do. Like, where is it drawing for on that daily, weekly, monthly chart, and try to build a reason as far as why. Why do you think it should do that? What would stop it from doing your initial idea? And then how would you be flexible and adjust? What things in price would allow you to make that flexibility take place, right? And if we talk about a lot of the elements that get you there, but you definitely want to reflect on this every single week. How was my bias? How was my anticipation of bias? How was my flexibility, right? Was I flexible? Did price go against me? What happened? And be very, very reflective. I have a whole template for self-reflection and weekly/daily reflection. I think I have that in my free community too, if you want to go check that out. It's definitely in my private community. And I definitely request that for all of my private community students to send it to me in a DM. Some of them do, some of them don't. Some are really busy and whatnot. But I'm saying power 3 of the daily candle. Absolutely amazing. Keep doing it. Every day in terms of the daily narrative. But session bias. Yeah, session bias. So session bias, I feel like, is complemented or made a lot easier when you're able to understand what the higher time frame is doing first. And then once you get better at identifying what the higher time frame is doing, based on obviously the concepts that we talk about, then the session bias generally will incorporate the liquidity pools that I talk about. Right, the list of liquidity pools that I mentioned, I shared it earlier, but it's in my free community, in my private community too. Just like I call the tactic I use liquidity mapping, right? The list that I have and how I navigate each liquidity pool within the daily range. It's all encapsulated though. My navigation skill for the drawn liquidity session to session is all encapsulated inside of the Power 3 idea. All inside of the idea of navigating the daily range, right? And then each day's bias within the weekly narrative is obviously encapsulated by the weekly view, like where I think the week's going to go, where I think the month's going to go. And then those are all encapsulated inside what I think the quarterly is going to do, right, for the next quarter. But obviously things can change dramatically with the quarterly view because you never know what can happen in the world, you know. Something can change overnight. But yeah, so let's drop down real quick. Let's talk about what happened on Friday. All right, so yeah, you can see the entire week, just looking at it from here, I mean, it's a mess. It was consolidated, right? It's not unreasonable because of what I've mentioned. It's the week before the swap over to the new quarter. So this type of price delivery is expected. So we went in expecting it, aiming for simply the minimums, right? It's pretty much it. Okay, and as long as you're comfortable with just taking the minimums, you can come away with something based on the things that we talk about. Okay, so if we map out this, here is the open to the close, right? So again, before we analyze what happened on that lower time frame, before we analyze anything that's ever on the lower time frame, you have to know where you're at on the higher time frame. I figured that this was potentially going to drop a bit when it started behaving in a certain way inside this. I believe inside this fair value gap too. If we go to the other assets, we have an SMT there. Okay, so one of the correlated assets hit the upper fair value gap inside of the weekly bearish fair value gap on a Friday. At the same time, let me see. At the same time, right, one didn't hit that. So that is indicating to us that there's weakness in the market, right? It's also incorporating the day it is and where we're at on that higher time frame. We were inside of a weekly bearish fair value gap on a Friday, right, with SMT that formed. Okay, so if we go to the 15-minute chart, we can see how the Dow swept the buy side, right? This is the daily candle. This, let me see. Something else I can also kind of toss in there, right? So this was yesterday's range. This is a tactic that some of you guys may have learned before, but this is the previous day's range up here. So you go from that high to that low, basically mapping out the whole entire daily, the previous day's candle. We got the middle portion of that. Anywhere from the 20 to 50% of the lower portion of the daily range from the previous day, if we're going to continue to remain bearish, generally within that area in price, referring back to the previous day's range, generally the lower 50 to 20% is where the best shorts are going to come from. Preferably, if price can't even get back up to the 50% of the previous daily range, generally within the 20% is going to be where the best ideas come from. And ironically, you'll see that this is the 25% area of that previous daily range. It's pretty ironic how the 25% presented the best, or 20 to 25% of the lower portion of the previous day's range presented the best delivery to the sell side continuing, right? So the best short, Friday ended up being obviously a reversal. The week started off running higher, hit the high up here. We broke down below this low. There was obviously relative equal lows here, which I pointed out to my private community. And you could see how price basically purged that. Once it purged that throughout the week, price ended up just continuing to try to sweep out even deeper. Came down, swept this out. So these relative equal lows, these relative equal lows. And then this here, I talked about this as a market maker sell model. If that was going to continue to try to reach for this sell side liquidity pool, obviously it was in consolidation, so it was a very risky idea. This SMT though definitely put like a supercharged ability for us to know that it's going to reverse in some capacity, because also we were inside the higher time frame fair value gap, right? This is very much the same across the board, across all these indices, right? So yes, this is a Dow, but this was the one that created the lower high. So this ended up being the stronger sell-off because the Dow ended up having the failure swing. So Dow swept Asia's low, but NAS and ES didn't. I missed looking at the Dow. Yeah, see, so when we only look at, because I don't trade the Dow, but this is a good example of, you know, certain information not being looked at when it comes to our process, like overall, can lead to you missing something, right? If you're just looking at the S&P and the NASDAQ, you don't have the full trio, so you can't tell if the Dow failed to give us a failure swing, so you can't tell if there's actually an SMT or not. You'll miss it, and then if a reversal like this takes place, you'll be questioning like, damn, what did I miss? And a lot of times that could be something you missed, aside from the fact that we were, you know, still consolidated. I mean, it could have very well ran higher, given the fact that we were in consolidation, given the fact that it was Friday. It could have, you know, it's a very much lower probability condition we were involved in. But once this happened, price broke that, got up here, and then displaced below this low. I mean, it was pretty much a given that they were going to try to attempt to try to dig a little bit deeper. I wouldn't be surprised if they try to do it one more time. Like I said earlier, we still have a bullish weekly order block that we could reach into when it comes to the indices down below, you know. So these little things. Once price did this right here, right, how it dropped lower, came all the way up, overlap this, that could have been a reason. If you drop down to like the 1 minute or lower time frames, that overlapping effect presented this as a potential balanced price range, at least for the moment. And then price was delivering up to the buy side. This can also most likely be seen as a market maker buy model on that 1 minute chart. Okay, and then once it broke back down below it, obviously overlapping fair value gaps again, price ended up continuing to reverse and just came back. Very clear, as you point out, that I need to look at the Dow for PM bias. I mean, it's clear. It's pretty much for just overall, right? I always bring up all of them. I mean, a lot of times I have this chart up, so I'm looking at all three of them. But you could see that the Dow had a larger displacement to the downside. But then again, it's Friday. We also, of course, we're inside that weekly fair value gap. And we were also inside of a opposing bearish PD array, right? So the drop could have been simply anticipated or thought of simply based on that logic I use for anticipating counter trend trades. When a higher time frame PD arrays met, when price is one-sided overall before, going into a Friday, hitting an opposing PD array, right? So, I mean, that alone, if you go into a Friday and you see these things, expect TGIF, especially if there's an SMT, like we just pointed out. But yeah, you could see how the Dow had that stronger delivery to the downside versus the other two because the Dow had that failure swing. But again, if you didn't see the Dow with the failure swing, you wouldn't have even probably anticipated it. You probably would have just been like, oh, it's probably just going to continue going higher because the NASDAQ and the S&P are continuing to make higher highs, right? But when in reality, we have this retracement. The Dow does at this moment have equal highs up here, so I think that that justifies even further support that this retracement is going to just pull into this bullish order block. Same with this, just to set up continued buy-side delivery. We'll see, though. If we lose this low and we get down below this volume imbalance mixed with this fair value gap, that is 1 PD array, 2 PD arrays, the swing low, 3, 4 PD arrays being broken. So we'll have this order block, the swing low, volume imbalance, but you can couple this volume imbalance with this overall fair value gap. So if it was to violate that, that turns us bearish for the indices. Otherwise, I'm still bullish. And we have overlapping candles in here. So what do I always say about when price has overlapping candles like this? What could be presented moving forward, at least for a day or two? Maybe even a week, because this is the weekly chart. All right, what can this present us when we see higher time frame overlapping candles? Is it indicative of trending? Is it indicative of harder to trade, consolidated market, and you got to lower your risk? Should you push harder because small ranges lead to large ranges? Or what do I generally say? Consolidation overall. Consolidation. Yeah. How do you behave in consolidation? What do you do when it comes to risk? And remember, consolidation can be us resting at equilibrium on the higher time frame. Consolidation can be us overlapping higher time frame candles like this, right? It could be us bouncing around between multiple new week opening gaps. It could be all this stuff put together at the same time. Reduce risk or sit on your hands. Exactly. Because you're in a 50-50 environment. The narrative may be bullish, but for now, timing-wise, if this is what's happening, it may not be time for price to move. You may want it to move. You may be begging the trading gods to make it move because you got to do something or you want to do this or whatever the case may be. But if it's not time, which, if a higher time frame is consolidating like this, generally it needs a higher time frame or it needs a red folder to push it out. But if it's not time, it's not time. And you could get chopped up and caught up for no reason because you're just pushing too hard when you could just simply wait. We don't have to take 100 trades to be profitable, right? Preferably less is more. You guys have probably heard that a lot. I didn't learn that lesson. I heard it all the time. I didn't learn that lesson entirely until 3 years ago, right? It so much so it got to the point where I was only taking and still only take 1 to 2 trades a day, max 10 trades a week, preferably less, because we're looking for good trades. We're not looking to engage in consolidation. I can, and if I see my model performing inside a market maker buy or sell model or inside my consolidation navigation models, then maybe I'll look to engage. But for the most part, I don't. And if I do, it's at half risk. And I'm only giving myself 1 attempt in consolidation. But again, I never go over 10 trades. For the last couple of months, I've barely gotten to 8 trades in a week. And I've shown that a funded account's being passed, okay, simply off of the rules that I mentioned. 86% accuracy, which I showed from the dashboard of Top Step in the screenshot. Okay. And, low stress, continuing to trust the bias and narrative, being correct, like I said, 86% of the time for execution. Bias-wise, overall, where price is going, I think we're in the high 90s. I think there's maybe been, like I said earlier, only 2 days I can remember that I got the bias wrong within the narrative. Narrative's been correct 100%. I've called it both lower and higher in terms of higher time frame narrative. Okay, so looking specific at hourly candle wicks being equal or larger than the bodies. Yeah, overlapping wicks sometimes can also be kind of interesting. See how this occurred like this? Just boop, 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 back and forth. When it just overlaps like this, you want to make sure you're waiting for a displacement. Because even if you waited and all this didn't make sense in here, and this is what you were gauging things off of, once price displaces out of that slop fest, look at what happens as a result. Small ranges lead to large ranges, right? So this small range in here, these small ranges in here may lead to a large range delivery, given the news we have coming also. That could be what they use, the federal fund rate and the FOMC. It may be used to push us through the high up here. Small ranges to set it up. We also have a quarterly change that may use that interest to push us up, right? So you want to make sure you're knowing how to navigate and keeping these things in mind. To me, that shows a lot of volatility and uncertainty. Yeah. And mind you, you just look at the news headlines and there's so much volatility and uncertainty. I mean, dude, it's like every single day I can't even keep up with how much crap is happening. Oh no, it's not even manipulation. It's for sure manipulation. This entire move here was manipulation. I'm sure that the powers that be that moved the market knew that Trump coming in was going to freak people out because people don't think for themselves. And things tanked all the way down just so all the people freaking out would get out of the market. So then big funds, big, smart, manipulative people that understand the markets, that know that drops are not scary, it just means things are at a discount. All of that getting out of entries that these people did that don't think for themselves got played because all these millionaires or the powers that be, I mean, including people like us, knew that this is a time to get in. Like, this is a time to load up your long-term investments, because if you believe in America, it's not going to go anywhere. So all this is all manipulation. Every piece of it, every point, every to the tick movement is manipulated to the point that it got to a yearly bullish order block and then delivered, and we called the low, which proves that this stuff is obviously controlled, because we've been able to control it, okay, in terms of like us being able to get in line with it, right? That manipulation achieved a quarterly objective a lot sooner than normal. Oh yeah, 100%, bro. That's a beautiful observation right there. We've had like pretty much, man, you could even make the argument that we've had like a whole 6 months, like a whole 2 quarters worth of price delivery happening every other month. Like 1,500 point days. Like, that's insane. Like, look at this. This candle simply to this candle, or to the low. This is a weekly chart. 2,680 points in 1 week. That is wild. That's a whole monthly range in 1 week. And it just did multiple over and over and over. Like, it's crazy. It's absolutely insane. Well, I'm looking at my sound thing, and it looks like everything has finally came back to normal. So it's like a little bit too loud. Hopefully it wasn't too loud for you guys. But having to make sure that you can hear me. Stupid technical issues. But yeah, so again, just in a nutshell, I know I've had you guys for much longer than I wanted to hold you guys. It's Father's Day. Happy Father's Day to you guys that are fathers. So yeah, we got this equal high up here. Everything is still intact, going bullish. Bearish DXY until proven otherwise. Bullish foreign currencies like we talked about until proven otherwise. Order block here is going to hold, hopefully. If it doesn't, and we break down below, say, the order block and the swing low, then I would possibly look to position for maybe the volume imbalance. Before that happens, though, we got low here, low here, low here, low here, low here. So all that stuff could be targeted. We got highs up here. We got this high up here, so those could be targeted. We have the fair value gap in here that should be used potentially if we're going to go higher as a added, like an extra PD array to push us higher. So that should be able to hold. If not, if it breaks this, swing low and really gets down into this level, again, that is not going to be supportive of the market maker buy model that I've been trying to frame this whole idea off of, which you guys have been able to also use as a confluence to trust your overall narrative. So I've essentially kept you guys in line with what the narrative is, what the bias is generally on a day-to-day basis, for sure on a month-to-month, week-to-week basis since the year started. I've been calling directly where price is going to go, and it's went there. And those of you, like you guys on the call, that have paid attention throughout the whole year, you have been able to see that and hopefully been able to take advantage of it, either in learning or in your trading adventures that you do on your own personal time. Of course, I don't put you in trades, but hopefully it's helped you guys frame out your own trades, being on the right side of the market. Okay, so yeah, it's essentially all I am really focused on. I really just see that maybe we open up, sweep out this previous week's low, use an order block, and then continue to go higher. So until that's proven otherwise, this was just an opposing retracement. And yeah, so I think that's all going to continue. And I guess we will put a ribbon on this. Any of you guys that have any questions or later on have questions, let me know in DM on Instagram. You could join my free Discord. If you guys do want to have a more intimate support system, more access to me, you want daily live calls instead of twice a week, I do have a private community you can go look at the details about that. Again, it's not for everybody, but those of you that do like my teaching style, that want to have more support from me and more calls with me, that's always available for those of you that are interested in that. I feel you need that hand-holding experience. Again, don't forget to like the video, subscribe to the channel if you haven't already. It goes a long way to get me or to get us in front of other people just like you that love trading, and you know, it just builds a community, right? And we attract more and more of the right people. So thank you in advance for that. And again, happy Father's Day to all of you beautiful people that may be fathers. You know, hug your kids tight, because some people unfortunately can't see their kids as much as they would like to, which I'm one of them, unfortunately. So hug your kids tight, the biggest blessing you can ever receive on this planet. So yeah, with that being said, you guys, God bless. I appreciate you guys for hopping on as always. Definitely enjoy yourselves today. You know, again, kiss your kids, love your kids. They need you, and hopefully they're part of the reason why you're looking to be a trader. Maybe, you know, maybe you got nieces and nephews also that look up to you as maybe a father figure. Just keep their faces in mind when you go through trading and deal with any struggles, you know, because it's well worth it, you know, because then you get all the time in the world you know, all the time in the world that you want to be able to spend time with the ones that you love. And you know, my child and the ability to be around my family was my main why, and then also to pass on my skill set to my brother, my little brother, and any kids that he may have or any grandkids I may have. It's also been the burning factor as far as why I've never quit, why I've been able to overcome and never think about quitting. It's because of that. So again, think about that. All my fathers out there, you know, remember this week is going to be a little hectic. We're going into a new quarter. We have a lot of news. So just be prepared for chaos. You know, keep tabs on some of the stuff we've talked about. Until something changes, nothing changes. And yeah. So if you have any questions, let me know. Otherwise, hope you guys have a happy Father's Day. And yeah, I guess I'll catch you all in the next one. God bless, and appreciate your time today.